Hello everyone, welcome back to the channel. In this lecture, we'll be taking up questions from unit number 5, accounting for share and debenture capital. So now, without wasting any time, let's move to our concepts. Okay, so before solving questions, I'll be giving you a brief idea of debenture and share capital. Okay, so now this accounting for share and debenture capital will be applicable for companies. Okay, will be applicable for companies. So see, we have discussed about proprietorship, we have discussed about partnership. Okay, now we will be discussing about company. Okay, company. Now for a company, how a company raises capital, how they raise fund, we'll be discussing about that. Okay, basically. So in proprietorship, who is the person who will bring in capital into the business? The proprietor, right? The proprietor will bring in capital into the business for commencement of the business, right? Now in this partnership firm, now who will bring? The partners, right? The partners will bring their share of capital. Okay, but in case of companies, okay, there is no partner, right? There is no proprietor. Then who will be the person bringing capital into the business? The promoter will bring. Okay, promoter means the person who has started the business, promoter. Okay, and public. Okay, and public. Now we will discuss about this. Okay, so sources. So let's discuss the sources of funds. Sources of funds, right? Sources of funds. What are the sources of funds for a company? Okay, there are basically two sources of funds. Okay, one is share capital. Okay, the second one is debentures, bonds, loans, okay, etc. Now we'll be just taking up questions on this share capital. Okay, after we finish share capital, we'll go with the debenture capital. Okay, now let's talk about share capital. Okay, what is this share capital? Share capital. Okay, basically there are two types of share capital. One is equity share capital, and the other one is preference share capital. Okay, now what is the definition of equity share capital and preference share capital? Okay, the definition of preference share capital is share capital having preferential rights as to dividend and capital is known as preference share capital. Okay, and the definition of equity share capital is shares which are not preference share capital is called as equity share capital. Okay, so now let's talk about difference between equity and preference share capital. Difference between equity and preference share capital. Okay, basically we'll discuss 2 or 3 4 difference between equity and share capital. Okay, equity and preference share capital. The first difference is voting rights. Okay, voting rights. Now when we talk about voting rights, what do we mean by voting rights? Okay, so for example, there is to be some resolutions to be passed in the company. Okay, some resolutions to be passed, there is some meeting wherein some important topics have been discussed. Okay, so now what will happen? There will be equity shareholders and there will be preference shareholders, right? So equity shareholders will be the one who will take important decisions of the company. Okay, they'll be eligible, they'll have the right to vote. Okay, now you may say preference shareholder, they don't have right to vote. No, it's not that way. Okay, they will have the right to vote, but only in certain cases. Okay, the second point of difference is dividend. Okay, dividend. Now we'll discuss about dividend. Okay, first, now what is a dividend? Okay, now say for example, this is a company, and there is a person called Mr. Y. Okay, Mr. Y. Now Mr. Y has invested money into the company. Okay, he has invested money into the company. Now in return, what will he get from the company? He will get dividend from the company. Okay, dividend from the company. Now this dividend will be out of profits after PAT, after all the profits, after all the expenses have been paid, after all the taxes have been paid. Okay, you will get profit after tax, and from the profit after tax, the shareholder will get his dividend. Okay, so this is called as appropriation. Okay, so dividend will be paid from the profit after tax. Okay, now see, in case of equity shareholder and preference shareholder, okay, what will happen? So preference shareholder, the word itself tells us that preference shareholders, okay, they have some preferential rights. Okay, what are the preferential rights which they have? They have preferential rights as to dividend and capital. Okay, in case of winding up. Now when a company earns a profit, okay, say for example this is the profit and loss statement, this is profit before tax, profit before tax. Okay, then from here the company will have to pay tax. Okay, say for example the company has paid tax, and after paying tax the company will have profit after tax. Okay, now from profit after tax the company will give dividend to the shareholders. Okay, now who will get the dividend first? Preference shareholders will get the dividend first. Okay, then after that equity shareholders will get the dividend. Okay, so preference shareholders will have preferential rights as to dividend. Okay, now second rights which they have is capital. Okay, repayment of capital, repayment of capital at the time of winding up, okay, at the time of winding up of the company. Now what is this? Now say for example the company is coming to an end. Okay, company is coming into an end. Now here a person has invested money into the business. Okay, yes, a person has invested money into the company. Now say for example the company is coming to an end. Okay, but there are equity shareholders and preference shareholders, both are there in the company. Okay, now in case of winding up, you know that the amount which the investor has invested into the company, this will have to be paid back to the investor. Okay, now in case of winding up of a company, who will get the capital, share of capital first? The preference shareholders will get their capital first. Then after that whatever is left will be given to the equity shareholders. Okay, I hope this is clear. The fourth point of difference will be rate of dividend. Rate of dividend. Okay, we know that dividend is the return which a shareholder gets, okay, on the amount invested into the company. Now in case of preference share capital, rate of dividend is fixed. Okay, when the company issues preference shareholders preference share capital, there will be specifically mentioned, okay, 12% preference share capital, 15% preference share capital. Now what is this 12% and 15%? This is the rate of dividend which they will be getting. Okay, the return which they will be getting from the money they have invested into the company. Okay, now in case of preference share capital, rate of dividend is fixed, whereas rate of dividend is not fixed for the equity share capital. Okay, rate of dividend is not fixed for the equity share capital. Now you may have a question: is payment of dividend mandatory? Is payment of dividend mandatory? Okay, will company have to pay dividend every year? Okay, is it mandatory? Okay, the answer is no. Okay, payment of dividend is not an obligation of the company. Okay, the company may or may not give dividend to the shareholders. Okay, so payment of dividend is not mandatory for a company. If a company has profits, okay, and if they want to give dividend, what will happen? Say for example, company will have an annual general meeting, AGM. Okay, company used to have AGM, annual general meeting, every year. Once in a year they will have to have this meeting. Okay, so in this meeting they will decide, okay, the board of directors will propose the dividends to the shareholders. Okay, shareholders, the board of directors will say we are proposing to give 10% dividend this year. Okay, 10% dividend this year. If the people, okay, if the members of the company, okay, refuses to take dividend, okay, they will not give any dividend. Okay, so this is dependent on the meeting. Okay, this annual general meeting, it will be decided whether the company will give dividend or not. Okay, now in case of losses, payment of dividend is not mandatory. Okay, if company is having losses and they want to give dividend out of past profits, they can do that, but it's not mandatory to pay dividend. It's okay, it's not an obligation, it's not a liability for the company to pay dividend every year. Okay, I hope this is clear. Now we have discussed difference between equity and preference shareholders. Okay, now next what we will discuss is how a company raises funds from the public. Okay, we'll discuss about that now. So for example, now this is a company. Okay, let's take an example of Tata Group. Okay, let's take an example of Tata is a listed company. Okay, I will discuss what is listed and unlisted. Okay, now Tata is a company. Okay, now Tata wants to raise funds. Okay, Tata wants to raise funds. Now what will the Tata do? Tata will go to the public. Okay, Tata will offer shares to the public. Okay, what is this offer shares to the public? Let's see. Okay, what is the process of issuing shares to the public? Okay, the company will issue prospectus to the public for issue of shares and raising funds from the public. Okay, for raising funds from the public. Okay, now what is a prospectus? See, you have seen, right, when you go for a new admission in any school, okay, the school will give you a prospectus. Okay, a prospectus of 10 to 15 pages, wherein all the achievements of the schools, okay, what are the facilities they have, okay, what is the education qualification of the teachers, okay, is there any rank holder, what are the curriculum activities which they will be providing in the school. So all the things about the school. Okay, basically advertising a school, right, that we have achieved this kind of achievement, we have this achievement, right, our students are always in the top 10 list. So everything will be mentioned, important things about the school will be mentioned in the prospectus. Okay, similarly, now when the company wants to take money from the public, okay, wants to raise funds from the public, the company will issue a prospectus. Okay, the company will issue a prospectus. Okay, the company will issue a prospectus to the public. Okay, to the public. Now the public will read this prospectus. Okay, the public will read this prospectus, and if they like, okay, how the company is doing, basically in this prospectus, financial position of the company will be given. Financial position means whether they are earning profits or losses. Okay, what is the sales, basically their financial statement will be given. Okay, P&L account will be given, then after that balance sheets. Okay, all the important figures will be written in the prospectus. Okay, now who are the directors? Okay, who are the directors of the company, who are in the top level management? Okay, top level management. So what are their future plans? Okay, everything will be mentioned in the prospectus. Okay, now public will read the prospectus. Okay, if they like the way company is doing the work, and if they want to invest money into the company. Second point, the public will give application. The public will give application along with the application money. Okay, now the public wants to invest money into the company. Okay, first step, the company will issue prospectus. Okay, basically the company wants to raise funds. Okay, wants to take funds from the public. What will the company do? The company will issue prospectus. Second, the public will, if the public likes, okay, if they want to invest money into the company, the public will give applications along with the application money. Third, the company will make allotment of shares to the public or subscribers. Okay, fourth point, the company will make calls of the remaining amount. Okay, you may not understand this, so now I'll explain it again. Okay, these 2 points, I'll come back to this 2 points. Okay, now see, I hope this is the brief discussion of how company will issue funds from the public. Okay, now see, what is this share? Okay, what is this share capital? What is this equity share capital? We will discuss in details. Okay, now say for example, this is a company. Okay, the company wants to invest. Okay, the company wants to do some expansion. Okay, wherein it requires 2000 crore rupees. Okay, 2000 crore rupees. Now say for example, is it possible for a company's owners to keep this, to invest this money into the company? Okay, no one will invest their own money into the company. Okay, even if they have. Okay, what will they do is they will search for some source of funds. Okay, so that people can invest into the company. Okay, or they will go for loans. Okay, they'll take loans from the banks. Okay, so now what will happen? The company is in need of 2000 crore rupees. Okay, now what the company will do? The company will have an option to ask money from the public. Okay, now there is a concept called authorized capital. Okay, now what is this authorized capital? Now before that, let's discuss about the balance sheet of a company. Okay, this is how a balance sheet looks like: equity and liabilities. Okay, we know that we have discussed about the partnership firm, right? In a partnership firm's balance sheet, you will always see capital. A and B, C partner, they invested capital into the business. Okay, likewise in case of company, this capital should be there. Okay, this capital will be there, because without investing money into the business, it is not possible to run a business. Okay, now equity share capital will be there. Now below this, it will be shareholders funds. Okay, below shareholders funds, you will find equity share capital, preference share capital. Okay, now this equity share capital, preference share capital will have number of shares. Okay, number of share, it will have number. Okay, number of shares. Okay, so for example, when a company was incorporate, okay, the company will have to make two important documents: MOA, memorandum of association, and point number 2 is AOA, article of association. Okay, in this memorandum of association, it will be clearly mentioned, okay, what is the authorized capital. Say for example, 1 lakh shares of face value rupees 10 is the authorized capital. Okay, now what is this authorized capital? The company has been registered with this number of shares. Okay, which means the company can issue maximum 1 lakh shares to the public. Okay, the company can issue maximum 1 lakh shares to the public. And what is the face value of one share? Okay, what is the face value of one share? The face value of one share is rupees 10. Okay, what do you mean by face value? What is the cost? Okay, of one share, if you want to understand this way. Okay, so the cost of one share is rupees 10. Now authorized capital means registered capital. Okay, now this is the maximum number of shares company can issue. Okay, say for example, the company is in need of money, so how much money they can raise from the public? Maximum money into 10 is how much? 10 lakhs. Okay, so maximum they can take money from the public is 10 lakh rupees. Okay, they can do it lesser than this. Say for example, 80,000, they can do 95,000, they can issue 95,000, but not more than this. Okay, this is the maximum number of shares they can issue to the public. Now what will happen? The company will issue shares to the public. Okay, say for example, there are 5 people. Okay, the company is in need of money. Okay, the company will give them shares. How much shares? Maximum 1 lakh. So each person will get 20,000 shares. Okay, each person will get 20,000 shares. The company is in requirement of how much money? 1 lakh into 10 lakh rupees. They are in requirement of 10 lakh, right? So each person will give how much? Each person will give 2 lakh rupees to the company. Okay, into 5 will be 10 lakh. So each person will give 2 lakh to the company. Okay, each person will give 2 lakh to the company. Okay, each person will give 2 lakh to the company, and the company wants 10 lakh rupees. The company will have 10 lakh rupees. They will get 10 lakh rupees from the public, and the company will give 20,000 shares to each shareholders. Okay, 20,000 shares to each shareholders. Now these five people will be the owners, members of the company. Okay, they will be the owners, they will be the members of the company. Okay, they have invested money into the company's capital. Okay, I hope you have understood this. Okay, same way is with preferential capital. Okay, company will issue preferential capital to the public and the public will give money to the company. Okay, now this kind of people will be called as owners or members of the company. Be very careful. Okay, they are owners or members of the company. Okay, I hope this is clear to you. Okay, this is how company will issue money from the public. Okay, now you may think that why these people will invest money into the company. Okay, what will they get in return? Okay, so the return which they will get will be called as dividend. Okay, each year they may or they may not get dividend on the amount invested. Okay, but they will be the owners of the company, right? There is a concept of capital gains. Okay, capital gains. So for example, in future this company becomes a big company. Okay, the big company. Okay, so this is a listed company. Say for example, if you don't understand as of now, it's fine. Okay, this is a bit technical concept. Now say for example, this is a big company. Okay, let's take an example of Tata Group. Okay, now Tata has been growing every year. Right? Now these persons, they have purchased one share for 10 rupees, right? One share for 10 rupees. Now in future, okay, the share price of this company may go to 100. You never know. It may go to 100. You never know, right? So what will happen in this case? If the share price has gone to 100, from 10 to 100, okay, there is a gain of 90 per share, right? What will these five people do? They will sell their shares. They will sell their shares to the other people. Okay, they will sell their shares to the other people. This way they will earn capital gains. Okay, it is called as capital gains. This is a bit different than technical questions. If you don't understand as of now, it's fine. Okay, so I hope you have a brief understanding of how company will issue money from the raise funds from the public. Okay, now let's talk about the journal entry. Okay, let's talk about the journal entry in case of issue of shares. Okay, now see, I've told you the company will issue prospectus. The company will issue prospectus to the public for issue of shares for raising funds from the public. Okay, and the second step was the public will give application along with application money. Okay, now the company is receiving application. Okay, before this let's write a question first. Okay, let me explain you. Okay, A Limited issued 10,000 shares of rupees 10 each, payable rupees 2 on application, rupees 2 on application, rupees 2 on application, rupees 3 on allotment, and rupees 5 on first and final call. Okay, now this is the number of shares, 10,000 number of shares the company has issued, and the cost of face value of one share is rupees 10. Okay, now this rupees 10 will be taken in three phases. Okay, what is the first phase? Rupees 2 on application, rupees 2 per share on application, rupees 3 per share on allotment when the company makes allotment, and rupees 5 when the company is in need of further money. Okay, the company will make a call to the shareholders. Wherein the company will say, we are in need of money, you have to give us the remaining rupees 5. Okay, now let's see the journal entry. Okay, how will we'll just discuss this, then we'll move to the MCQ. Okay, now see, the company is receiving application, right, along with application money, right? So the company is receiving money into the, you have to prepare this from the point of view of a limited company. Okay, now the company is receiving money, so what will be the journal entry? Bank account debit to share application account. Okay, they are receiving application. How much is the amount of share application? 10,000 is the share, and they are receiving rupees 2 per share on application. Okay, so they are receiving 20,000 on application. Okay, they are receiving the company is receiving 20,000 on application. Now this share application account, okay, we'll have to close this account. Okay, we'll have to close this account by transferring it to capital account. Okay, so what will be the journal entry? This has been created. See, this is in the credit side. Now we have to close this. Okay, so what we'll have to do, we'll have to debit. Okay, share application account debit to equity share capital account. See, now what we have done here, same amount, 20,000. Okay, now what we have done here, now this is the money which they are getting from the public. Okay, this is the money they are getting from the public. Now what is this money? Okay, why are people investing money into the company? Okay, to get the capital of the company. Okay, so the company is getting money. Okay, on the other hand, the company's liability is increasing. No, the company's liability is increasing because the company will have to pay back this 20,000 at the time of buyback of shares, or there is a concept of buyback. You don't have to understand that as of now. Just understand that when the company comes to an end, winding up of a company, the company will have to pay this capital back. Okay, so it is a liability for the company, right? We know that asset, increase in asset will have debit balance. Okay, so increase in assets will be debited. We have debited bank. Okay, because the company's bank is increasing, money is coming in. Same way, there is an increase in liability. We know that liability will always have credit balance, so increase in liability will be credited. So we have created. Okay, basically this is a temporary account. Okay, this too is a temporary account. We'll have to close this account. Okay, and we have closed this account by debiting it in the second entry. Okay, I hope this is clear to you. Okay, now what is the third entry which the company will pass? Now the company has received application money. Okay, 10,000 shares, and the amount on application was ₹2 per share. Okay, company had asked for ₹2 per share on application. Now what was the second entry? What was the third step was the company will make allotment of shares to the public. Okay, now the company will make official allotment, means the company will now issue letter of allotment to the public. Letter of allotment means the company will give a evidence, okay, to the public that yes, you have invested money into the company and this is the number of shares, this is the amount which you have paid to us. Okay, so that you can have it as a legal document. Okay, now see what will be the third entry. This is the first entry, this is the first entry, this is second entry, this is third entry. Now company has received money from the public as application money, right? Now the company will make allotment. Okay, wherein the company will ask for the allotment money. See, ₹3 was on allotment, right? The company will now ask for the allotment money. Okay, what will be the entry? The company will make the liability first because the company is asking money from the public, right? What will be the journal entry? Share allotment account debit to equity share capital. Okay, 10,000 into what was the amount? 10,000 into 3 was on application allotment. Okay, so the amount which the company will ask is 30,000. Okay, on allotment. See, the company has made allotment due now. What do you mean by allotment due? The company has, see, by creating equity share capital account, the company has said to the shareholders, okay, to whom shares has been given, that see, we have basically make the amount due. Okay, now we have done our work, now it's your time to pay the money, the allotment money. Okay, now what will the shareholders do? The company will basically give letter of allotment. If you want, you can go to the Google and you can see for this. Okay, letter of allotment, how does it look like? Okay, letter of allotment. The company will give letter of allotment to the 5 people who have invested money into the company. Okay, now these 5 people will give their allotment money now. Okay, so what will be the journal entry? My company is getting money, so bank money is coming in. Bank account debit. See, bank account debit 30,000. The liability of capital was already created by the company. Okay, now what will be the journal entry? To share allotment account. Okay, now see, this allotment has been debited, now it is credited, so this is basically closed. Okay, so the company has closed this share allotment account by crediting it. Okay, so what is the amount? 30,000. So the net entry left is see, share capital has been credited and bank has been debited. Okay, so this is how the second and third entry will be. This is how fourth entry will be passed. This is the fourth entry. Okay, I hope this is clear. Now last step. Okay, last step. last step. Okay, so see what will be the last step. Okay, what will be the last step? Fifth step. Okay, now see, the company had received application, wherein the company received application money. Now the company has received allotment money. Okay, and it has made allotment to the company. See, the company has increased its liability by how much? 20,000 and 30,000. Okay, so what was the last step? Now the company is, whenever the company wants to call, okay, whenever the company is in need of money, the company will make a call to the subscriber, to the members who have taken the shares, and they will ask for the remaining amount. Okay, so what is the remaining amount? 10,000 into 5 per share. Okay, so 50,000 is the remaining amount. Now on the fifth step, what the company will do, the company will ask for the call money. Okay, so what will be the journal entry? Share, you can say first and final call. Okay, the company can have first call, second call, final call. Okay, share, first and final call account debited. Okay, to equity share capital. If it is preference share, this will be preference share capital. Okay, to equity share capital account. Now what is the amount of capital for final call? 10,000 into 5 was the per share, right, amount. So 50,000. Now the company will ask for 50,000 from the members who have taken the shares. Okay, the company has asked by making this amount due. Okay, the company has made this amount due, means the company has shown their liability. Now the company has done its work. Now who will be the person doing the work? The public, the person who has taken shares will give money, final call money, to the company. Okay, so the last step will be bank account debit to, this is a temporary account, we have to close this. Okay, to share first and final call account. Okay, money came in, and the company on the other hand showed their liability, that they have to pay back this amount. Okay, now see what was the total number of shares which the company has issued to the public? 10,000 into 10, right? So 1 lakh is the money the company got in total. Okay, 2 on application, 3 on allotment, and 5 on calls. Okay, now the company got 1 lakh rupees in total, and the company has increased its liability by how much? 1 lakh rupees. So in case of winding up, when the company comes to an end, this 1 lakh will be paid back to the 5%. Okay, to the 5% who has taken share of the company. Okay, now see here, share capital 20 lakhs. Okay, capital 30 lakhs, liability, total liability is 50 lakhs, and the 30 is 50,000. Okay, so with this the total liability of the company will be 1 lakh. Okay, now see again here, the company has received 20 lakh here in bank, 20. The company has received 30 lakh here on allotment, total is 50. Now again at last they have received 50,000 here. Okay, 50,000 here, 10,000 into 5. So total money they have received is 1 lakh. See, okay, so this is how it is done. Now let's come to the question. Okay, see why I have discussed you, because this all concepts will be questions will be based on these concepts. Okay, so whatever I teach, it will not be a waste of time, so don't forward a single second. Okay, you just have patience and you just watch. Okay, it will be very easy for you to answer this type of questions in the exam. Okay, because it will be based on concepts. Okay, so now we'll start with the questions of accounting for share and debenture capital. Okay, now in between, if any discussion required, I will take up the discussion, and now we'll move with the question. Okay, question number 146. So this is continuation of the last unit. Okay, 145. This unit, basically this unit number 1, I'll be uploading it soon. Okay, or I will be uploading before this unit number 5. Okay, now see question number 146. I'll give you this PDF, don't worry. I've told you this is my number. (70057211165). Okay, you can DM me and you can ask for the PDF. Okay, I'll give you these questions. Now see, let's see the first question. Okay, correct sequence of issue of shares is, what is the correct sequence of issue of shares? I've told you, first will be company will issue prospectus. Okay, the company will issue prospectus. So see, issue of prospectus. Okay, B is the first step. Second step will be company will receive application. the company will receive application from the public. Okay, see, so A is the second step, and the third step was company will make allotment of shares. The company will make allotment of shares by issuing letter of allotment. Okay, so this is the third step, and the last step will be letter of regret. Okay, what do you mean by letter of regret? Say for example, there are 6 people, okay, who have applied for shares. Okay, 1 lakh shares, company has issued total 1 lakh shares, and there are 6 people who have applied. Okay, but the company wants to give only shares to the 5 people. Okay, now the person who has given application money, okay, the company will give him letter of regret that we are sorry, we cannot issue you shares. Okay, so whatever money the company has received from application will be refunded to the 6th person. Okay, I hope this is clear. So what is the answer for question number 146? B, A, C, D. Okay, B, A, C, D. B, A, C, B, A, C, D. Okay, I hope this is clear. Now let's see question number 146. On equity shares, dividend is proposed by the board of directors every year, but rate of dividend is fixed on. We have discussed now. See this point. See, in case of preferential capital, rate of dividend is fixed, whereas rate of dividend is not fixed in case of equity share capital. Okay, so what is the share capital in which rate of dividend is fixed? So the answer is preferential capital. Okay, preference shares. I hope this is clear. Now let's see question number 148. Now see, okay, now we'll discuss premium. Okay, we'll discuss premium before moving to the next question. Okay, issue of shares at premium. Okay, now what is this premium? At premium. Okay, now see, in this example, we have taken this example now, wherein the company had issued 10,000 shares of 10 each. Okay, 10,000 shares of 10 each. Now see what will happen. Okay, I have told you the company has its memorandum, MOA, wherein authorized capital will be written, right? This memorandum is a document. Okay, it is a basic document of the company. Okay, whenever a company comes into existence, they will have to make this document. Okay, 2 documents, MOA and AOA. Basically, AOA will be the rights and responsibilities of the company. Okay, who will be the person responsible for this particular thing, and what can the company do. Okay, what are the, say for example, the company has to take some important decisions. Okay, everything will be mentioned in this. Okay, if the particular thing is not mentioned in this articles and the company violates it, it will be ultra virus transaction. Okay, it will not be a valid transaction. So this is a very important document. These 2 documents are very important. We will discuss in brief later on, okay, about these 2 documents. So in this MOA registered, there will be authorized capital. Okay, the maximum number of shares company can issue. Okay, now in this authorized capital, number of shares will be mentioned and face value will be mentioned, rupees 10, for example. Okay, face value means what is the cost of 1 share. Okay, the cost of 1 share. Okay, now when we issue shares at public, when we issue shares to the public, okay, we can issue shares at premium. What do you mean by premium? Now we'll understand this. Okay, premium means something extra. Okay, say for example, there is a company, A Limited Company. Okay, A Limited Company issues 10,000 shares of face value rupees 10 at a premium of rupees 5. Okay, at a premium of rupees 5. Okay, now the cost of the share was how much? 10 rupees, but the company is issuing it at 15 rupees premium. Okay, the company is charging 5 rupees extra. Why the company is doing this? Okay, we'll discuss later on. Okay, now see, the face value is how much? 10, and the premium is 5. Now what is the total price which the public will pay to the company for 1 share is rupees 15. Okay, rupees 15. Now this premium, why is the public paying this extra 5 rupees? This is the question, right? Now this depends on the situations. Okay, this depends on the company. This depends on the strength of the company, whether it is a good company or a bad company. Okay, if the good company asks for some extra money, okay, the public will see whether this kind of this company will be able to give them maximum returns or not. Okay, say for example, in case of Reliance and Tata company, okay, now people have faith in this company. Okay, they can invest any amount in this company because this company has been doing good from so many years. Okay, now say for example, if I'm Rahul, if I started a company, Rahul company, okay, if I started one company and if I ask for something extra, will they give me? They will say, Buck, who are you? We don't know you, right? You are just a beginner, you've just entered into a business and you are asking some extra money as capital. No, we will not give you. Okay, but if Reliance and Tata asks, will public give? Yes, because public has faith on this company, okay, that the company will basically give a good return to the public. Okay, if we invest some money into the company will give us good return, okay, in future. So this depends on the company to company, okay. The premium amount depends on the companies, okay. If it is a good company, public will be willing to give more. If it is not a good company, the public will not be willing to give any money, okay. Now see, you'll have to note one thing. Note, there is no limit prescribed for premium on issue of shares to the public, okay. There is no limit, okay. This 5 rupees can be 50 rupees also, this 5 rupees can be 50, it can be 500, it can be 5,000 also, it can be 50,000 per share also, okay. There is a company called MRF, okay. The price of one share of the company is around 80,000 rupees. Just imagine, one share is equal to 80,000, this MRF company, okay. So premium can be any amount, there is no limit on the premium, okay. Note number 2, you note this in important, have a separate sheet, okay. So have a separate sheet wherein you will note all the important points, and just one day before exam you will revise these notes, okay, to the public. Now note number 1, what is note number 2? Companies cannot issue shares on discount, okay. This is not allowed by the Companies Act, okay. Now what is discount? Say for example, the face value is 10 and the company wants to issue this at rupees 8. Can the company do this? No, the company is not allowed to do this, okay. They cannot issue shares less than the face value. They can issue shares more than the face value, okay, but they cannot issue shares at less than the face value, okay. This is not allowed. You will have to remember this, okay. Now let's see the question. Maximum limit on premium on shares is, maximum limit of premium on shares is 5%, no limit 10%, not more than 100%, okay. So the right answer is C. There is no limit on issue of shares, okay, on premium. You can issue it at any amount, okay. Now see question number 149, okay. Company formed by special act. Company formed by special act is called chartered company, registered company, statutory company, none of this, okay. Now special act of what? Special act of the parliament, okay. Special act of the parliament. Companies formed by the special act of parliament will be called as statutory companies, okay. Now can you give me one example? Yes, the example is RBI, okay. RBI is a company formed under special act, okay. This is not a normal company, okay. This is formed under special act. I hope this is clear. Now see question number 150. Shares for which amount is paid by public are called dash shares, okay. Shares for which amount is paid by public are called dash shares, okay. Authorized, what is the authorized? I have told you the maximum number of shares company can issue, maximum number, this is just the number, okay. Paid up shares, bonus shares, all of this. So what is the amount paid by the public called? It will be called as paid up shares, okay. So what will be the right answer? The right answer will be paid up, okay. Or authorized is the maximum number of shares the company can issue. Bonus shares is, the concept is different, okay. You don't have this in your syllabus, and none of this is also not the option. The right answer is paid up shares, okay. So the amount paid by the public to the company will be called as paid up capital, okay. Paid up capital. Now what is paid up capital? Say for example, the face value is 10, right? In our example, application money was 2 and allotment money was 3, right? So call money was 5. Say for example, the company received application and allotment money, but the company did not receive call money, okay. Now out of 10, the company has received total 5, okay. So what will be the paid up capital in this case? It will be 5, okay. Paid up capital will be 5, okay. Now when the moment they pay this extra, the remaining 5, it will be called as, the paid up capital will be 10, fully paid up. It will be called as fully paid up, okay. I hope this is clear. Now let's see question number 151. when a company has not called up the total nominal face value of shares, it is known as, when a company has not called up the total nominal, okay, see, we have discussed out of 10 the company has called up 5, the remaining 5 is to be called up. Okay, so what will it be called? Issued capital, unissued capital, subscribed and fully paid up, subscribed and not fully paid up. Okay, so the answer will be subscribed and not fully paid up. Okay, when a company has not called up the total shares value of shares, it is known as subscribed and not fully paid up. Means the public has subscribed, right? The public, in our example, 5 people was agreed to take shares of the company, right? Now out of 5, those 5 people will be called as subscribers. Okay, they have subscribed to the issue of shares. Okay, now this first point is valid, subscribers and not fully paid up. See, right, out of 10 they have paid only 5, so the remaining 5 is to be paid. Okay, so when a company has not called up the total nominal face value of shares, it is known as subscribed and not fully paid up. I hope this is clear. Now let's see question number 152. Okay, Vinod Limited is registered with 50,000 shares of rupees 10 each. Okay, registered means authorized capital. This is the maximum number of shares the company can issue. Okay, face value is 10. It issued 40,000 shares to the public at 10 per share. See, what is the number of shares it has issued? 40,000. Okay, less than this, less than 50,000. See, less than, they have issued less than 50,000. Yes. Okay, of 10 each. Applications were received for 38,000 shares. Okay, applications were received for 38,000 shares, and the allotment was made to all the applicants. Okay, the authorized capital of the company is, what is the authorized capital? 50,000 into 10. So the authorized capital is 50,000 into 10. 5 lakh is the authorized capital. 5 lakh is the maximum amount the company can take from the public. Okay, I hope this is clear. Question number 152 is done. Now question number 153. Okay, I will skip this question as of now. Okay, we will discuss this question when we discuss forfeiture of shares. Okay, now let's see question number 154. Shares which have preferential rights are called, I have told you what will be the shares called? Preference shares. Okay, preferential rights as to dividend and capital. Okay, they will have preferential rights as to dividend and capital, right? So the answer for question number 154 is B, preferential shares. Okay, equity shares, preference shares, dividend, bonds. Okay, we have not discussed this as of now. Okay, this is the second source of funds for the company. The first source is equity share capital and preference share capital. Okay, now equity shares, before dividend has been paid to equity shares, preference shareholders will be paid dividend. Okay, in case of winding up of a company, before paying capital to the equity shareholders, it will pay to the preference shareholders. Okay, so the answer for this question is B. Okay, now see question number 155. The part of capital which will be called up only at the time of winding up of a company is called capital reserve, reserve capital, secured capital, authorized capital. Okay, so what is the capital which will be called up at the time of winding up? Will be called as reserve capital. Okay, reserve capital. This is the capital which the company has not called. Okay, now say for example, the company has authorized capital of, authorized share is 10,000. Okay, now out of this 10,000, the company has issued 8,000. Okay, so the remaining 2,000 has not been issued by the company. Okay, so this remaining 2,000 will be called as reserve capital. Okay, it will be called as reserve capital. Now don't be confused. Okay, don't be confused between capital reserve and reserve capital. Students used to be confused between capital reserve and reserve capital. Now see how to remember. Okay, let me tell you. See, we used to say authorized capital, okay, issued capital, okay, subscribed capital. Now see, the company has maximum 10,000. Out of this, company has issued 8,000, and out of 8,000, the public has given application for, say for example, 7,000 shares. Okay, so now out of this 10,000, 2,000 has been issued, right? What is the remaining? 8,000 has been issued, 2,000 is the remaining shares. Okay, so this will be called as reserve capital. Reserve capital. See, in all the cases, capital is coming second. Okay, so the amount which has not been called up, okay, will be called as reserve capital. Okay, so the capital will come second. Now in case of capital reserve, this is something different. Okay, so see, capital is coming first. Okay, so don't be confused. Okay, between this is the point, this is the way how you will remember. Okay, authorized capital, capital is coming second. Issued capital, capital is coming second. Subscribed capital, capital is coming second. So reserve capital will be the answer for this. Okay, so this is the way you will remember. Okay, reserve capital. The part of capital which will be called up only at the time of winding up of a company will be called as reserve capital. Okay, I hope this is clear. Now see question number 156. Which kind of preference shares entitles its shareholders to receive arrears of dividend of previous year? Okay, cumulative preference shares, non-cumulative preference shares, convertible preference shares, non-convertible preference shares. Okay, now let's discuss. Okay, what is this? Preference share capital. Okay, preference share capital. Okay, now preference share capital can be of different types. First one is cumulative, second one is non-cumulative, the third one is convertible, fourth one is non-convertible. Okay, fourth one is non-convertible. Now what is this convertible and non-convertible? See, this is a preference share capital. Okay, now this kind of, if company has issued convertible preference share capital, okay, which means this preference share capital can be converted into equity share capital. Okay, now what will happen if it is converted into equity share capital? The equity share capital, the preference shareholders, okay, who were preference shareholders earlier, now will be equity shareholders. Okay, and they will enjoy the rights and responsibilities of equity share capital, equity shareholders. Okay, basically they will have voting rights. Okay, basically they'll have voting rights of the company. Okay, non-convertible means this cannot be converted into equity share capital. Okay, I hope this is clear. Now let's talk about cumulative and non-cumulative. Okay, non-cumulative, cumulative and non-cumulative. Now what do you mean by cumulative and non-cumulative? Let's try to understand this with a timeline. Okay, say for example this is previous year, this is current year. Okay, now I've told you that payment of dividend is not mandatory for the company. Okay, if the company wants, the company can pay dividend. If the company don't want, the company cannot pay dividend. Okay, so for example the company has issued cumulative preference share capital. The company has issued cumulative preference share capital. Okay, now for this year the company has not paid any dividend. Okay, the company has not paid any dividend. Okay, but the company has paid dividend for this year. Okay, the company has paid dividend for this year. Okay, now the preference shareholders, they have received dividend for this year, for the current year. Okay, now being the owners of cumulative preference shares, okay, the preference shareholders, okay, who have been issued cumulative preference shares will have the right to receive dividend of this period also. Okay, it will be accumulated in their account. Okay, so the company will have to pay dividend for this year also. Okay, basically they will have the right to pay, they will have the right to receive dividend for this year. Okay, also. Okay, now if the company has issued non-cumulative, if the company has issued non-cumulative, non-preference share capital, okay, non-cumulative preference share capital. See, the preference shareholders has received preference shares dividend for this period. Okay, but if it is a non-cumulative, they will not have any right to receive dividend for this period. Okay, for the previous year. Okay, I hope this is clear. Now what is the answer for question number 156? Which kind of preference shares, which kind of preference share entitles its holders to receive arrears of dividend of previous year? Arrears of dividend means the dividend which has not been received in the previous year. Okay, so which kind of share, which kind of preference shares gives them right? The cumulative preference shares gives them right to receive dividend of previous years. Okay, I hope this is clear. Now let's discuss question number 157. Equity shareholders are creditors, owners, customers of the company. None of this. I have told you equity shareholders are the owners of the company. Okay, they are the owners of the company. So the right answer will be B, owners. Now let's see question number 158. Arrange the following in proper sequence as types of share capital. Okay, we have to arrange the sequence of share capital. Okay, now what will be the first sequence? B. Okay, the company will first issue capital to the public. Okay, the second sequence will be C. The company will issue and the public will subscribe. Okay, first the company will issue, then the public will subscribe. Okay, and the third one is paid up capital. Okay, sorry, the third one will be called up capital. Okay, now the company has issued in the first step, the public has subscribed, and now the company will call up the capital. Okay, the company will ask for the money. Okay, now after company asks for the money, the public will pay for the money. Okay, so it will be called as paid up capital. So the correct sequence for this question is B, C, D, A. Okay, first will come issue of capital will come first, then subscribed capital will come first, then called up capital will come first, then at last paid up capital will come. Okay, so the answer for question number 158 is B, C, D, A. Okay, now let's see question number 159. Which of the following capital is not shown in company's balance sheet? Which of the following capital is not shown in the company's balance sheet? Authorized capital, this is to be shown. Issued and subscribed capital, this is to be shown. Called up and paid up is to be shown. Reserve capital, now this capital, reserve capital, is not to be shown in the balance sheet. Okay, so what will be the answer for question number 159? The answer will be reserve capital. Okay, so the answer is D, reserve capital. Now see question number 160. The shares of public limited company are freely transferable, transferable with restrictions, not transferable, transferred in the prescribed manner of articles. Okay, now I want to discuss few things regarding this. Okay, question number 160. Question number 160. Okay, now we are talking about company. We are talking about company. Okay, now there are different types of company. The first one is private limited company. The second one is public limited company. Okay, now in this public limited company there is further bifurcation into listed company. Listed company. Number 2 is unlisted company. Unlisted company. Okay, now to start a private limited company you will need minimum of 2 members. Okay, you will need a minimum of 2 members, and to start a public limited company you will need a minimum of 7 members. Okay, means 2 persons has to take your share, and in case of public limited company 7 person minimum have to subscribe to the shares. Okay, now what is this listed company? Listed company means companies who are listed in the stock market. Who are listed in the stock market. Okay, unlisted company means not listed in the stock market. Okay, now let's discuss transfer of shares. Transfer of shares means selling of shares. Okay, selling of shares. Now in case of private limited company, you cannot transfer your shares. Okay, it is prohibited. Transfer of shares is prohibited. Okay, now in case of public limited company, okay, public limited company. Now in case of public limited company there are 2 types, listed and company. Okay, listed company, the shares of listed company is freely transferable. Freely transferable. Okay, now in case of unlisted it is transferable but with some restrictions and conditions laid down in the articles of association. Okay, articles of association. So this is a very important point. Okay, so transfer of shares, let's discuss about transfer of shares. In case of private limited company, transfer of shares is prohibited. In case of public limited company, there are 2 types of public limited company. One is listed. Listed means companies who are listed in the stock market. Okay, so the shares of this type of company is freely transferable. There is no restriction. Okay, anyone can be the owner. If say for example I'm having 18 shares of Tata company. Okay, Tata Steel company. Now if I want, I can sell these shares anytime. Okay, there is no restriction. Now in case of unlisted company it is transferable but with some restrictions and conditions laid down in the articles of association. I have told you there are 2 documents, MOA and AOA. Okay, so this AOA, article of association, will lay down some restriction and conditions. Okay, if this is not satisfied you cannot transfer shares. Okay, now if the question, write down on notes. Okay, if you want you can copy this part. You pause the video and you copy this. Okay, very important. Okay, now see, write one note. Okay, note. If the question is silent, assume it to be a unlisted public company. Okay, it is unlisted because maximum number of companies are not listed in the stock market. Okay, now see what will be the answer for question number 160. The shares of public limited company, we will assume it to be unlisted, okay, are freely transferable. No. Transferred with some condition. Transferred with restriction. No. Not transferable. This is in case of private limited company. Transferred in prescribed manner of Article C. Okay. AOA. Okay. So the right answer for question number 160 will be D. Transfer in prescribed manner of articles. Now let's see question number 161. What is the correct sequence of allotment of shares? Okay. What is the correct sequence of allotment of shares? So what will be the answer for this? Inviting applications for investors. Okay. This will be first. Then after that, application money receive, right? We will receive the application money. Then we will do the allotment due. Okay. Then fourth, allotment money received. Okay. And fifth will be share call money due. Okay. So this will be the sequence. What will be the sequence? B, D, C, A, N, E. Okay. So this is the sequence. This is the answer for question number 161. Now let's see question number 162. 162. The company issued 20,000 equity shares of ₹10 each to vendors. After issuing them the shares, the vendor will be considered as, okay, basically they are talking about purchase consideration other than cash. Okay, so to whomever shares has been issued, okay, they will be called as owners of the company. Okay, so the answer for question number 162 is B, owners. Okay, they will not be called as creditors, they will not be called as customers, they will not be called as lenders, they will be called as owners. Okay, so now question number 163. 163. Okay, the following refers to the maximum amount of share capital issued by a company in its lifetime, except, okay, except what is the maximum amount of share capital issued by the company in its lifetime. Okay, subscribed capital, authorized capital, nominal capital, registered capital. Okay, so what's the question saying? Maximum amount of shares, except, okay, except the answer for this will be subscribed capital. Okay, subscribed capital, because authorized capital is the maximum. Registered capital means the number of shares they are registered with. Okay, what is the number of shares in the MOA? Okay, memorandum of association. So this will also be as registered, authorized. Okay, and nominal capital. Okay, nominal capital is also has the same meaning. Okay, so these three option will not be valid, so the valid option will be subscribed capital. Okay, so now let's see question number 164. Okay, 164. Amount of calls in advance is added to paid up capital, subtracted from the paid up capital, shown on the asset side of the balance sheet, shown on the equity and liability side of the balance sheet. Okay, so what will be the answer for this? Now what is calls in advance? Okay, so for example, company has issued shares. Okay, face value is 10. Now on application they will receive 5, say 2, sorry, they will receive ₹2. Okay, ₹2. On allotment they will receive 3. On first and final call they will receive 5. Okay, so now company has made only calls for these two. Application money to they will receive when they give application, and the company has made only allotment due. Okay, the company has only asked for the allotment money, and the first and final call has not been yet asked from the company. Okay, now a shareholder pays the first and final call in advance. Okay, they pay the first and final call in advance. So what will this be called? Where will it be shown? It will be shown on the equity and liability side of the balance sheet. Okay, basically this is a part of share capital, so it will be shown on the equity and liability side of the balance sheet. Okay, now question number 165. Which of the following is not a preliminary expenses? Preliminary expenses, I guess I have discussed. Okay, let me have a brief discussion on this. Okay, preliminary expenses. Now what is a preliminary expenses? Okay, I guess I have discussed this in the basic lecture. Okay, anyhow I'll repeat it. Okay, now say for example, this is 1/4/2023. Okay, now a company, okay, has an idea at this moment. Okay, the owner of the company who wants to start a business has an idea at this moment, and the business has been started on 2023. Okay, 1/10/2023. Now the expenses, okay, the expenses which the owner of the business, okay, of the company has incurred during this period, okay, before starting the business, okay, the expenses which he has incurred before the business has been commenced will be called as preliminary expenses. Okay, preliminary expenses. Now what are the examples? Research and survey expenses. Okay, number 2, engineering services. Okay, this should be rendered by an expert or the owner himself. Okay, and the third one is legal fees. Okay, legal fees, like in case of companies, filing fees. Okay, they have to file their MOA, they have to file their AOA with the ROC, Registrar of Companies, right? So these are the expenses which will be called as preliminary expenses. Okay, now see what is the question? Which of the following is not a preliminary expenses? Okay, cost of printing various documents, is this a preliminary expenses? Yes. Stamp duty, is this a preliminary expenses? This will be covered under legal expenses. Yes. Registration and filing fees. Yes. Interest on debentures. Okay, will this be called as preliminary expenses? No, this will not be called as preliminary expenses. Why? Because interest on debentures. What is interest on debentures? The interest you pay to the debenture holders, right? So when will you be able to issue debentures? Only after the company has been incorporated, right? Only after this period. Okay, so this will not be called as preliminary expenses, the interest which you pay. Okay, because shares, debentures will be issued only after the company has been formed. Okay, has been incorporated, has been commenced. So what will be the answer for 165? The answer will be D. Interest on debentures is not a preliminary expenses. Okay, I hope this is clear to you. Okay, so let's see the next question. Question number 166. Okay, match list 1 with list 2. Now let's see list 1 and list 2. What is list 1 and list 2? Oversubscription. Okay, oversubscription means company has applied for 10,000 shares, say for example, and the public has applied for 12,000 shares. Okay, so what will be the correct option for this oversubscription? Let's see. 12,000, this will be the correct option. 50,000 applied. Okay, 10 shares offered. Okay, so company has offered 10,000 shares and the public has applied for 15,000 shares. Okay, now under subscription it will be point A. 9,000 applied, offered 10,000. Under subscription means the company has offered 10,000 shares, but the public subscribed for only 9,000. Okay, so this will be case of under subscription. Issue at discount. Okay, what will be the case? Issue at discount. Issue at rupees 95, face value 100. Okay, face value means cost of the share, per share cost, and they have issued at 95. They have asked 95 rupees from the shareholders. Okay, issue at premium, it will be face value 100, cost was 100, but they have issued it at 105. Okay, they have asked rupees 5 extra. Okay, so this is the answer for question number 116. Basically, in case of issue of shares, okay, this discount, issue at discount will not be valid. Okay, issue at discount will not be there. Issue at discount, okay, this will not be allowed. Okay, this is prohibited. Issue of shares at discount is not prohibited. Okay, only in 2 cases it can be issued at discount. First one is when we discharge our legally enforceable debt. Okay, say for example, there is a creditor to whom you have to make payment. Okay, but you fail to make payment and you have issued shares to the creditors. Okay, now in that case you can issue shares on discount. And second case is when you issue sweat equity shares to the employees. Okay, that is out of your syllabus. You will learn that in your further studies. Okay, now let's talk about question number 167. Okay, so this is purchase consideration other than cash. Okay, now what do you mean by purchase consideration other than cash? Purchase consideration other than cash. What do you mean by purchase consideration? When you purchase anything, you have to pay money for that. You have to pay the price for that, right? Other than cash means we will not make the payment in cash, but we will issue equity shares to the vendors. Okay, say for example, you have purchased machinery for rupees 1 lakh. Okay, now normally what will happen? Normally you will pay cash for this, you will pay cash for this, you will pay cash, you will pay money for this. But in purchase consideration other than cash, what will happen? You will not pay cash. Okay, you will not pay cash. You will issue shares to the vendors. Okay, from whom you have purchased the machinery, you will issue shares. Okay, so now let's see. Now the main what will be the main motive of this type of questions? To find out the number of shares. To find out the number of shares issued to the vendors. Okay, so this will be the main motive of purchase consideration other than cash. Okay, the main motive of question the main the requirement of the question will be to find out the number of shares. Okay, now see question number 167. A company purchased machinery for 6 lakhs. Okay, they have purchased machinery for how much? 6 lakhs, out of which 1 lakh was paid immediately. 1 lakh was paid immediately means you have paid cash 1 lakh immediately when you purchase. Okay, and the balance amount was discharged by issuing equity shares of 10 each. Okay, case 1 is issued at par, at premium of 25% and a discount of 25%. Okay, now what is the requirement of the question? How many shares will be issued to the by the company to the vendor in each cases? Okay, so now we have to calculate the number of shares issued at each. Okay, in case of premium, par and discount. Okay, now let's see this question 167. Question number 167. Okay, we have purchased what? We have purchased machinery for 6 lakhs. Okay, what is the cost price? Cost price is rupees 6 lakhs. Okay, cash paid, how much you have paid? You have paid 1 lakh rupees cash, right? 1 lakh has been paid immediately. What is the balance payable? Balance amount payable is rupees 5 lakhs. I hope this is clear, right? You have purchased a machinery for 6 lakhs. You have paid 1 lakh immediately. So what is the balance left? Balance left is 5 lakh. Okay, so the face value of one share is rupees 10. Now what will happen if what will be the number of shares issued? Okay, we have to calculate that how many number of shares the company has issued. Okay, so the first case is at par. What do you mean by par? Par means equal to face value. If your face value is 10, so number of shares issued per share will be rupees 10. Okay, I hope this is simple and clear. Okay, so now how will we solve this type of question? Let's see. We have to find out the number of shares. Okay, so what is the formula? Amount payable divided by issue price. Okay, so this is the formula you have to remember. Okay, number of shares is equal to amount payable divided by issue price. Now in this case, what is the amount payable? 5 lakhs. What is the issue price? See, we have issued one share for rupees 10. We have issued at par, right? So one share for rupees 10. So 10. So what will be the answer for this? The answer for this will be 50,000. Simple. 50,000 shares. Okay, 50,000 shares. So at par, what is the answer? 50,000 shares. Okay, 50,000. Now we have to calculate at premium 25%. Okay, number 2, at a premium of 25%. Okay, now see, amount payable, number of shares. What is the number of shares? Formula is amount payable divided by issue price. Okay, now we have issued shares at premium of 25%. Premium of 25% means 25% extra. We are asking 25% extra basically. Okay, so we are issuing shares at a premium of 25% extra. So face value is 10. What will be the premium price? Premium will be 25% of face value. Okay, so 25%. What will be the 25%? It will be 2.5%, right? It will be 2.5%. Okay, so 2.5%. So if you add this, how much you will get? You will get 12.5. So the issue price is 12.5. Okay, so now let's find out the number of shares. Amount payable was 5 lakh divided by 12.5. Okay, so what will be the answer for this? So yeah, someone came to meet me, so very sorry. So now what will be the answer for this? Divide by 12.5 will be your 40,000 shares. Okay, so 40,000 shares will be the answer. So in this case, what will be the answer? The answer will be 40,000. Okay, now the third case is at a discount of 12%, which means we are issuing shares at a discount of 25%. Okay, so Number 3 is at a discount of 25%. Okay, now number of shares, what is the formula again? Amount payable divided by issue price. Okay, so the amount payable is same, 5 lakhs. Now what is the issue price? We are issuing it at a discount of 25%. Discount means we are asking for 25% less. Okay, so what is the face value? Face value is rupees 10. What is the discount? Discount is rupees 2.5. okay, so if you less 2.5, how much you will get? 7.5, right? So what is the issue price? 7.5 per share. Okay, 7.5. So what will be the number of shares? Number of shares will be 66667 shares. Okay, 66667. You cannot write, the answer is 66666.66. okay, so you have to round off this figure. Okay, now answer for this point number 3 is 66,667 shares. Okay, I hope this is clear, simple and easy, right? Now let's see question number 168. Okay, let's see question number 168. What's the question saying? A company issued 20,000 equity shares of 10 each, payable rupees 3 on application, rupees 2 on allotment, rupees 2 on first and final, rupees 2 on first call, and rupees 2 on final call. Okay, so 3, 6, 8, 10. Raghav, to whom 1,000 shares were allotted, did not pay allotment and call money, which means both. Okay, he did not pay first and final call. Okay, both first and final call. Now Ritu did not pay 2 calls on 600 shares. Okay, she did not pay 2 calls on 600 shares. Okay, allotted to her. And Rohit, to whom 400 shares were allotted, did not pay the final call. Did not pay the final call. Basically this is calls in errors, right? Calculate the final amount received on final call. Okay, calculate the final amount received on final call. We have to calculate the final amount received on final call. Now before moving further, let's discuss what is calls in arrears. Calls in arrears. Okay, now you know that companies issued shares. Say for example, a company has issued share or 10,000. Face value is rupees 10. Okay, payable is on application rupees, what is the question? 3,322. Okay, so 3, allotment rupees 3, first and final call rupees 2 each. Okay, so this is the 10 amount. This is the total amount the shareholder has to pay. Now say for example, for application and allotment money has been paid. Okay, and there is a shareholder called Raghav. Okay, he did not pay the allotment and calls money. Okay, calls money. He did not pay the allotment and calls money. Okay, now the company has asked for the money, no? But the shareholder failed to pay. Okay, so that kind of transaction will be called as calls in arrears. Okay, if a shareholder has paid in advance before the company calls, it will be called as calls in advance. Okay, calls in advance. But on the other hand, if the company has asked for the money but the shareholder has failed to pay the money, that will be called as calls in arrears. Okay, calls in arrears. I hope this is clear. Now let's see in this case what's happening. We have to find out the final amount received on final call. Okay, so let's solve this. Solution. Okay, so what is the final amount to be received? Final amount to be received. What is the final amount to be received? How many shares the company has issued? The company has issued 20,000 shares. Okay, and what is the final call money? Rupees 2. Okay, rupees 2. Now see what will happen. 20,000 into 2. The company should ideally receive 40,000 rupees. Okay, the company should receive 40,000 rupees. But out of this, there are 3 shareholders, Raghav, Ritu and Rohit, who have failed to make some calls money. Okay, they have failed to pay some money. So let's see. We'll have to less calls in arrears. Calls in arrears. Okay, calls in arrears. Now what is the calls in arrears? Let's see. Raghav, Ritu and Rohit. Okay, now see. Raghav to whom 1,000 shares were allotted did not pay the allotment and call both money. Okay, he did not pay the call money. Now what's the requirement of the question? We have to find out the amount to be received. Okay, on final call. Amount to be received on final call. So we will take only the final call figure. Okay, we will take only the final call figure. Now Raghav has been allotted 1,000 shares and he failed to pay allotment and calls money, both calls money, right? First and final call. So Raghav will not be able to pay 10,000 into 2, 2,000 rupees, right? Now Ritu did not pay 2 calls on 600 shares. Okay, she did not pay 2 calls on both the calls on 600 shares. So 600 into 2, because 2 is for final amount. Okay, 2 is for final call. So she did not pay 1200. Now Rohit, to whom 400 shares were allotted, did not pay the final call. Okay, so Rohit, he has been allotted how much shares? 400 shares. Okay, he has been allotted 400 shares. He did not pay final call money. So what will be the amount for this? 800. So what is the total amount which the company has not received? 2000 plus 1200 plus 800. Okay, so the company has not received 4000 on final call. Okay, so if you less this is the amount to be received. Okay, see, 20,000 into 2, but out of this 4000 has not been received. So how much the company will receive? 40,000 minus 4000 will be 36,000. Okay, simple. So the answer for this is 36,000. Okay, 36,000. This is the answer for question number 168. Okay, so if you want to copy, you can copy this. Okay, you may write here amount to be received on final call. Amount to be received on final call is 20,000 into 2, 40,000, and this is the calls and errors. Okay, and this is the final amount which the company has received. I hope this is clear. Now let's move to the next question, question number 169. Okay, 169. So now, money received in advance from shareholders, before it is actually called up by the director is, okay, what is this called? It is called as calls in advance. Okay, now what is the requirement of the question? Let's see. Debited to calls in advance account, credited to calls in advance account, debited to calls account, none of the above. What will be the answer for this? Amount money received in advance from shareholders before it is actually called up by the director. Okay, will it be debited? Will it be credited? Okay, basically the answer for this question will be B. Okay, it will be credited to the calls in advance account. Okay, credited to the calls in advance account. This is a liability for the company. Okay, so you know that liability will always have credit balance, so it will be credited to calls in advance account. Okay, so this is the answer for question number 169. Calls in advance account. Okay, now let's see question number 170. Okay, the process of issuing shares to a vendor in exchange of any asset is known as, what is it known? It is known as purchase consideration other than cash. The issue of shares for consideration other than cash. Okay, so the answer for this is D. Point number 4 is the answer. Okay, now let's see question number 171. Let's see question number 171. What's the question saying? PQR Limited issued 40,000 equity shares of rupees 10 each at par, payable rupees 3 on application, rupees 4 on allotment, and the balance on first and final call. Okay, applications were received for 1,10,000 shares. Application for 20,000 shares were refused. Refused means rejected. An allotment was made pro rata to remaining applicants. Okay, amount received on allotment is, okay, what is the amount received on allotment? We have to see this. Okay, now we have to calculate. Now this is a very important question. Okay, and a bit tricky one. So let's try to solve this. Okay, now see, before we move further, let me just tell you these notes. Okay, these notes I have prepared specifically for you students. Okay, now just watching the lecture will not help. Okay, what you will have to do, you have to, this is my number, you DM me and you ask for the PDF. Okay, students whom I know personally, I am sharing them. Okay, they are sharing with their friends as well, but students who don't know me, okay, you can call me, you can text me in this number and you can ask for the PDF. Okay, so take the PDF, okay, print out, take a printout of the PDF and sit with the PDF questions. Okay, then only you will be able to relate to the questions. Okay, it's very easy to understand that way. Simply looking at the screen is very difficult to analyze things. Okay, so it's better you take the PDF from me and you take a printout of the PDF and you keep the questions with you when you watch the video. Okay, now let's come back to the question. Okay, what's the question saying? Let's read it out again. PQR Limited issue 40,000 equity shares of 10 each at par, payable rupees 2 on application, 4 on allotment, and the balance on first and final call. Okay, applications were received for 1,10,000 shares. Okay, now see what is the issued shares. Issued share is 40,000. 40,000 shares has been issued, and how much shares the company applied? the public has applied for 10,10,000 shares. Now, can the company issue 1,10,000 shares? No, the company cannot issue. What's the maximum shares the company can issue? 40,000. Okay, the issued number of shares only the company can make allotment for this. Okay, now what is the excess amount? The excess amount is 60,000. Okay, sorry, the excess amount is 40,000. What am I saying? The excess amount is 70,000. Okay, sorry, the excess amount is 70,000. Okay, now see what is the question saying. Let's read it further. Application for 20,000 shares were refused. What do you mean by refused? Rejected. It was rejected. Okay, so now out of this 20,000 shares were rejected, which means refunded. The amount they received, the company received on application, was refunded to the shareholders. Okay, now and allotment was made pro rata to the remaining applicants. Okay, allotment was made pro rata to the remaining applicants. Now see, it's very important concept. Okay, pro rata allotment, very easy. Now see, total shares application the company received was 1,10,000. Okay, maximum application the company received was 1,10,000. Now, can the company say to the public that no, don't apply for 1,10,000 shares? Okay, only apply for 40,000 shares? No, the company cannot say that, right? Because you don't know how many people will send you application. Okay, think from the point of view of a company. Okay, now you don't know now who will send you application for subscribing to the shares. Okay, you don't know. Let's say for example you have a shop. Okay, and you open the shop. Now can you say how many number of customers you will have during the day? No, you cannot say, right? Similarly, in case of company don't know how much shares of application they will receive. Okay, now see, company can allot only 40,000 shares out of this, right? Now for 20,000 shares the company has said that sorry, we cannot give you any share. Okay, this is refunded. Okay, refunded. Now what is the remaining amount? 90,000 shares. 90,000 shares. Okay, now this remaining 90,000 shares will be given to the 40,000 shares. Okay, will be given to shareholders in pro rata basis. Okay, now see, we will say those who applied for 90,000 shares will get how much? 40,000 shares. Okay, those who had applied for 90,000 shares will get 40,000 shares. Okay, so can I say, if I remove all these zeros, okay, so can I say those who had applied for 9 shares will get 4 shares only. Okay, applied 9, received 4 or allotted 4. Insert. This is called as pro rata allotment. Okay, now what is the requirement of the question? The question is saying that we have to find out the amount received on allotment. Okay, what is the amount received on allotment? Now see, for this I will pass a journal entry. Okay, we'll understand it through a journal entry. Okay, now what is the first entry which we will pass? Bank account debit to share application account. What is the application money? Rupees 3. Okay, rupees 3. Now what will be in bank? 1,10,000 into 3. Okay, 3,30,000. Now you may say, why? Students may have question. Okay, those students whose concepts are not clear. Why 1,10,000? Why not 40,000? Okay, because you have received application for 1,10,000 shares. Okay, you have received application money for 1,10,000 shares. Okay, now you have received the money. Now company has received the application money, so the company will have to make treatment. We have to make journal entry for this. The company has to record this in the books. Okay, now number 2, share application account debit to share capital account. Okay, now in second entry we will make the adjustment entry. Okay, in second entry we will make the adjustment. Now see, in the first money you have received whole money. Okay, now out of this we are refunding how much? We are refunding 20,000 shares into 3. Okay, so 60,000 shares has been 20,000 shares has been refunded. Okay, 20,000 into 3, 60,000 rupees has been refunded. Okay, see, bank was coming in the first entry, now bank is going out. Debit what comes in, credit what goes out. Okay, so we have refunded 60,000. Now in this share application how much will come? 3,30,000. Okay, in share capital how much? 40,000 into 3. Okay, how much? 1,20,000. Okay, 1,20,000. Now, why 40,000 into 3? Because one thing you have to remember is share capital. Okay, share capital represents the capital of the company. Don't be confused. Okay, this represents the capital of the company. How much should come in the share capital? Only the amount which the company has asked, not more than that, not less than that. Okay, you write this somewhere. In share capital account, only those amount will come which the company has asked. Okay, nothing more than that, nothing less than that. Okay, I hope this is clear. Now see, what is the total of debit side? The total of debit side is 3,30,000. And what is the total of credit side? It is 1,80,000. See, so how much is the difference? There is a difference of 1,50,000. Okay, now where will this 1,50,000 go? It will go to the share allotment account. Share allotment account. Okay, how much? 1,50,000. I hope this is clear to you. Okay, now why allotment? Let's see why we used to transfer it to allotment account. Let's try to understand. Okay, now see here what has happened. Those who had applied for 90,000 shares, okay, those who had applied for 90,000 shares got how much? 40,000 shares. Okay, now these people, out of these people, everyone has got their allotment. Okay, those who had applied for 9, they got less, but they got the allotment. Okay, they got the allotment. Now those who have not been allotted anything, see, they have been refunded. Okay, these people, 20,000 shares have been directly refunded. Okay, allotment has not been made. Now see, these people, 90,000 who had applied for 9,000 shares, okay, will get 40,000 shares. Okay, now in future, as they have been allotted the shares, okay, they will have to give the allotment money, they will have to give the calls money, right? Now in this first and second step, they have just given the application money. As of now, they have just given the application money. Okay, now in future, these people who have applied for 90,000 shares, okay, they have been allotted 40,000 shares. So in allotment, how much they will have to pay? Okay, in future, how much they will have to pay? Amount to be paid in allotment. Okay, 40,000 into how much? What is the allotment money? Rupees 4. Okay, rupees 4. So in future, they will have to pay 1,60,000. They will have to pay 1,60,000 in future. Okay, when the company makes allotment. Okay, when the company makes allotment. Okay, now they will have to pay 1,60,000. What? They have to pay 1,60,000 in the future. Okay, now see in this what has happened. What has happened? How much is the extra number of shares? 50,000 is the extra, right? Now ideally, you may think that these 50,000 should also be refunded, because 1,50,000 should also be refunded. Why? Because they have not been allotted shares for this 50,000, right? You may say that. But see, in future, the people who have been allotted shares, they will have to give to the company 1,60,000, right? They will have to give to the company 1,60,000, and the company will have to give them how much? 1,50,000. Okay. Now, do you think is it better that company gives the shareholder 1,50,000 back and again asks for 1,60,000? Do you think this is a good idea? Is it a logical or a smart idea to do? No, right? What is the best way what is the best way to solve this, settle this transaction? See, you have to receive 1,60,000 from the shareholders. In future, you have to receive 1,60,000 and the company has to give 1,50,000. So it is better to what? To keep this 1,50,000 and in future ask for balance 10,000 only. Okay, ask for balance 10,000 only. Okay, so now we have got our answer for this question. See, what is the answer for this question? Amount received on allotment. What is the amount received on allotment? What will be the amount received on allotment? It will be 10,000. Okay, why 10,000? Because on application we have adjusted this 1,50,000. We have adjusted 1,50,000 because 1,60,000 has to be received by the company in advance. In future from the shareholders. Okay, so instead of paying 1,50,000 to the shareholders, okay, returning 1,50,000 to the shareholders, it's better to retain that money and adjust it for the future transaction. Okay, now for those who don't understand, let me explain it again. Okay, now see, 90,000 shares was asked, okay, applied, and the company allotted only how much? 40,000 shares. Okay, 40,000 shares has been allotted. Okay, now how much they have given to the company on application? 90,000 into 3, 2,70,000. Okay, ideally how much they should give? 40,000 into 3 is 1,20,000. Okay, now what is the extra amount they have given? 1,50,000. Okay, extra money given on application. They have given extra how much? 1,50,000. How did I get this 1,50,000? They have given 2,70,000, but they should give 1,20,000 because this is the maximum number of shares the company can issue. Okay, but they have given application money for 90,000 shares. Okay, I hope this is clear. Now 1,50,000 is the extra money the shareholders have given on application. Okay, now see, the company can make maximum allotment of 40,000 shares, right? To applicants of 90,000 shares, those who had applied for 90,000 shares, they will be getting 40,000 shares. Okay, so they will be getting 40,000 shares. Okay, now the shareholders have given only the application money. This is application money. The application money, they have got the extra money. Now in future, when the company makes allotment of shares, when the company makes allotment of these 40,000 shares, the company will ask for the allotment money, right? So how much the company will ask? The company will ask 40,000 into what is the allotment price? The allotment amount is 4. See, the allotment amount is 4. Okay, now the company will ask for rupees 4. How much? 1,60,000. Okay, now see, the company has to give 1,50,000, has to return 1,50,000 to the shareholders, okay, to whom shares has been allotted, and they have to take 1,60,000. So is it not better to not refund this money to the shareholders? Okay, and when they have to take the allotment money, they will just take the difference amount of 10,000 rupees extra. Okay, 1,60,000 is to be paid, but they have 1,50,000 with them, okay, which they retain. So the application, the amount which they will receive on allotment will be rupees 10,000. Okay, I hope this is clear. Cannot be more I cannot explain more better than this. Okay, so if you want, you can copy this. Okay, let me just okay, now if you want, you can copy this from here now. Just copy this from here. Okay. Take a screenshot, or you may pause the video and copy. Okay, I hope this is clear. Now let's move to question number 172. What's 172 saying? Let's see. A company invited applications for 1 lakh shares and it received application for 1,50,000. So what is the excess amount they receive? 50,000 on 50,000 shares. Okay, applications for 30,000 shares were rejected, right? Applications for 30,000 shares were rejected, means 30,000 share people who had applied for 30,000 shares were not given any shares. Okay, and the remaining shares were allotted on pro rata basis. How many shares an applicant for 3,000 shares will be allotted? Okay, basically what's the question asking us is, if a person has applied for 3,000 shares, okay, how much shares the company will give them? Okay, if a person has applied for 3,000 shares, how much shares the company will allot them? Okay, now let's try to understand this question. 1 lakh and 1,50,000. Okay, question number 172. Question number 172. Okay, so what is the number of shares issued by the company? 1 lakh. Okay, how much was the shares applied by the public? 1,50,000, right? Excess is 50,000. Okay, so what is the amount, what is the shares refunded to whom we have not allotted anything? 30,000 shares. Okay, this will be basically go to credit side of bank account. Okay, this will go to credit side of bank account. We have refunded this money. Okay, now let's see. Oh, so it's 20,000. Sorry, it's not 30,000, it's 20,000. 20,000 shares. Okay, 20,000 has been refunded. Now let's see the case. Okay, now out of 1,50,000, okay, if 20,000 have been rejected, okay, how much left? 30,000 is left. 1,30,000 is left. Okay, how much left? 1,30,000 shares is refunded. Is how much? 20 or 30? Acha, sorry, I have seen question number 172. Sorry. See, the rejected amount, 30,000 shares have been rejected. Okay, 30,000 have been rejected. So this was correct. 30,000 rejected. Okay, so how many left out of 1,50,000? If 30,000 have been rejected, so 1,20,000 shares left. Okay, now see how will we solve this type of question. The public has applied for 1,20,000 shares. Okay, but the maximum shares the company can issue is, maximum shares the company can allot is 1 lakh. 1 lakh. Okay, so can I say those who had applied for 12 shares will get 10 shares? Can I say, if I remove this 40, I can see, right? Those who had applied for 12 shares will get 10 shares. Okay, they have applied for 12, they will get 10. Okay, to be more precise, can I say, can I divide this to 12 by 10? Okay, if I divide 12 by 10, I'll get 1.2. Okay, now can I say those who have applied for 1.2 shares, they will get 1 share only. Okay, fraction shares are not allowed, but this is just for your understanding. Okay, this is just for your understanding. Okay, so can I say those who had applied for 1.2 shares, they will get only 1 share. Okay, how did I get this? Total number of shares is 20,000 because 30,000 has been refunded out of 1,50,000. Okay, so 1,20,000 is left. So those who had applied for 1,20,000 will get only 1 lakh share. Okay, so if I remove this 40, I will get 12 by 10. And to be more precise, if I divide, I will get 1.2 is to 1. Okay, so 1.2 is to 1. Now, what is the requirement of the question? The question is saying how many shares an applicant for 3,000 shares will be allotted. Okay, so if a person has applied for 3,000 shares, how much he will be allotted? Okay, if applied for 3,000 shares, how much will be allotted? We have to calculate this now. Okay, so see, those who had applied for 1,20,000 shares, those who had applied for 1,20,000 shares, they are getting more or less, they are getting more number of shares or lesser number of shares? They are getting lesser number of shares, right? Those who had applied for 1,20,000 shares, they are getting 1 lakh share only. Okay, now a person who has applied for 3,000 shares will get lesser than what? Will get lesser than 3,000, right? So now for the calculation purpose, the ratio which we have calculated is 1.2. 1.2 is to 1. See, 1.2 is to 1. Okay, now we will use this 1.2 as a basis for calculation. Okay, now how can I say those who had applied for 3,000 shares, they will get divided by 1.2. How much? They will get 2,500 shares. Okay, there is a formula of applied and allotted. Applied divided by allotted into allotted. Okay, there is a formula called, it's very confusing for the students. Okay, students used to be very confused with this, so I hope this is better way to understand. Okay, this is a much better way to understand. Okay, so those who had applied for 1.2 shares will get 1 share. Okay, so if a person has applied for 3,000 shares, he will get lesser than that, right? Now if you want to divide, if you want to find a lesser figure, you will have to divide, right? So this is 1.2 is the basis of calculation. We have find out this number as a basis for calculation. So we will what? We will divide 3,000 by 1.2 and we will get 2,500 shares. I hope this is clear, right? Now why we divide? You may have a question, right? So for example, you have 2 apples. Okay, and you want to divide it between 2 people. You want to give 2 apples to 2 people. So how much apple a person will get? One person will get 1 apple. Okay, now to find out this amount, to find out the lesser figure, right? If 2 apples has been divided into 2 people, so one will get only 1, right? Now to get a smaller amount, you have to divide. This is a basic rule, right? To get a smaller amount, you'll have to divide, right? So in this case, what we are doing, 3,000 is the shares, what? 3,000 is the shares which the shareholder has asked for, but he is getting lesser than 3,000, right? So if we divide 1.2, we will get 2,500, okay? So I hope this is clear. So what is the answer for this? The answer is 2,500 shares. Okay. Now if you want, you can pause the video and copy this, okay? Copy this if you want. I hope this is clear. Okay, now let's see question number 173. 173. Okay, V Limited was formed with a nominal share capital of rupees 40 lakh divided into 3 lakh shares of 10 each. Nominal share capital means you can say authorized or registered. Okay, the company offered 1,30,000 shares to the public. Okay, payable rupees 3 on application, rupees 3 on allotment, and the balance in first and final call. Applications were received for 1,20,000 shares. Okay, all the money payable on allotment was duly received except on 2000 shares held by Y. Okay, first and final call was not made by the company. Calls in arrears amount will be. We have to basically find out the calls in arrears amount. Okay, now see what is the authorized share. 4000 shares is the authorized share. 4000 shares is the authorized share. Okay, face value is rupees 10. The company had offered how much? 1,30,000. Okay, lesser than the authorized, right? Yes. Now payable 3 on application, 3 on application, 3 on allotment, and the balance on first and final. Okay, applications were received for 1,20,000 shares. Okay, there is an under subscription. Okay, there is an under subscription of 10,000 shares. Okay, all money payable on allotment was duly received. That means there was no calls in arrears up to allotment. There was no calls in arrears up to allotment. Okay, but on 2000 shares held by Y, there is a shareholder Y who have been given 2000 shares. Okay, he failed to make the first and final call amount. Okay, allotment. Company did not make the first and final call at all. Okay, first and final call has not been made at all. So see what will happen. Application has been made, allotment due has been made, first and final call has not been made at all. Okay, so one shareholder. Okay, let's read the question again. All money payable on allotment, was duly received except on 2000 shares held by Y. Okay, there is a shareholder who have been allotted 2000 shares. He have failed to pay the allotment money. Simple, right? So what will be the cost in arrears amount? Simple. 2000 shares into what is the amount of allotment? 3. Okay, 3. So what will be the answer? 6,000 will be the answer. Simple, right? 6,000 will be the answer for this. Now see, let's question number 174. 174. ABC Limited purchased furniture of rupees 10 lakh from KK Limited and paid 20% of the amount by accepting bills of exchange in favor of KK Limited. The remaining amount was paid by issuing equity shares of 100 each at a premium of 25% to KK Limited. What number of equity shares to be issued to KK Limited? Okay. Now let's analyze the question. 174. Question number 174. Okay, so what is the amount of furniture? 10 lakhs. Okay, cost price, what is the cost price? 10 lakhs. Okay, now the question has said that 20% of the amount was paid by accepting bills of exchange in favor of KK Limited. Now what do you mean by bills of exchange? 20% of the amount was to be paid by drawing bills of exchange. Basically what will happen? It will be a bills payable for the ABC Limited. Okay, because ABC Limited had purchased, right? So ABC Limited will get a bills payable from KK Limited. Okay, now see, if 20% has been less 20% bills payable. Okay, so what will be the amount? 2 lakh. So 2 lakh will be paid within 12 months. Okay, and the company has issued bills payable. Okay, sorry, this should be BP. Okay, bills payable. Now what is the remaining amount? 8 lakhs. Okay, amount payable, balance amount payable is 8 lakhs. Okay, now we have to find out the number of shares. What is the formula? Amount payable divided by issue price. Okay, what is the amount payable? 8 lakhs. Out of 10 lakh, 2 lakh has been paid, will be paid by issuing bills payable, and the balance 8 lakh will be paid by issuing equity shares. Okay, then now they have been issued, see, they have been 10% rupees 10 face value each at a premium of 25% to KK Limited. Okay, so it has been issued at a premium. So what will be the issue price? Let's calculate. What is the face value? Face value is rupees 100. What is the premium amount? 25%, which means 25 rupees. And what is the total issue price? 125. Okay, so 125. So what will be the number of shares? 8 lakh divided by 125 will be 6,400 shares. Okay, 6,400 shares will be issued. So this is the final answer. Okay, pause the video, and if you want you can copy it. 174 has been done. Okay, we are done with question number 174. Now let's come to question number 175. Issue of shares on discount, okay, is not allowed under which section of the Companies Act 2013? I have told you we can issue shares at par, at premium, but issue at discount is not allowed. Okay, only in two cases. What are the cases? when we convert the liability, okay, our creditors, we have to pay the amount to the creditors. When we convert the amount to payable to the creditors into equity shares, okay, then we can issue. And second case is when we issue shares to the employees of the company as ESOP, okay, sweat equity shares. Now, what is the under which section issue on discount has been prohibited? It will be section 53, okay. This basically you have to remember, okay, section 53. So under section 53 of the Companies Act 2013, issue of shares at discount has been disallowed, okay. Now let's see question number 176. RK Limited invited applications for 10,000 equity shares of rupees 10 each. Applications were received for 15,000 shares and pro rata allotment was made to the applicants, okay. If Mohan was allotted 80 shares, find the shares applied by him, okay. Similar question, but in this case we have to find out the shares applied by him, okay. Now let's see this question 176. Question number 176, okay. Now see, what is the amount of shares the company has issued? 10,000, okay. The company is applied, the company has given application for 10,000 shares, okay. So what is the number of shares issued? 10,000 shares, okay. Now what is the number of shares applied by the public? 15,000 shares. See, the company received application for 15,000 shares, okay. So 15,000 shares. So what is the excess? Excess 5,000. So there is a pro rata allotment. Pro rata allotment. Okay. Now see what's the question saying. Allotment was made to all the applicants. Okay. So can I say those who had applied for 15,000 shares will get 10,000 shares. Okay. Those who had applied for 15,000 shares will get 10,000. Basically, will be allotted 10,000 shares. Okay. Now let's find out the basis of calculation. This 30 will be gone. Okay. So 15 is to 10. So if I further divide, I'll get 1.5 is to 1. Okay. So applied for 1.5 shares. Okay. 1.5 shares. Allotted 1 shares. Okay. Those who had applied for 1.5 shares will get 1 share. Okay. Now see, if Mohan was allotted 80 shares, find the shares applied by him. Okay. So basically we have to find out the applied share. Okay. If he had been given 80 shares, so what is the shares applied by him? Okay. Now see, those who has asked for more shares are getting less shares, right? So he has been given 80 shares. So basically what will happen? He has asked for more shares. Right, he has asked for a higher number of shares, but he got only 80. Okay, so I have told you, if we have to divide, if we have to find a lesser number, we'll have to divide, but if you want to find a higher number, we'll have to multiply. Okay, so what is the basis of calculation? 1.5. So what will the number of shares applied by Mohan? 80 into 1.5. Okay, so 80 into 1.5 will be 120 shares. So Mohan has applied for 120 shares, but he has been given only 80 shares. Okay, I hope this is simple and easy. So you just note this down. Okay. We are done with 176. So what's the answer for 176? 120 shares. Now let's see 177. 177. Okay. The directors of T Limited resolved that 2,000 equity shares of rupees 10 each be forfeited. Okay. Now we are in concept of forfeiture. Okay. Now before moving further, let me explain concept of forfeiture. Okay. Many students used to have problem in this forfeiture. Okay. It's very easy, very logical and very easy. Now see question number 177. So before moving to question number 177, we will discuss forfeiture of shares. Forfeiture of shares. What do you mean by forfeiture of shares? Forfeiture of shares means cancellation. Cancellation of shares. Okay, cancellation of shares. Now let's solve one example for this question. Okay, example. ABC Limited issued 10,000 shares of rupees 10 each, payable 3 on application, 3 on allotment. Basically it cannot be more than 2.5. okay, so let me follow the rule. 2.5, let's say 2 on application, 3 on allotment, 5 on first and final call. Okay, let this be the question. Okay, all the money were received, all the money were received, all the money were received, forgive me for my handwriting. Okay, all the money were received except on 1000 shares held by Mr. Y, okay, who failed to pay the allotment money. Okay, calls was not made. Okay, the company did not make the company did not ask for the call money. Okay, so application got it, allotment money yes. Okay, except for 1000 shares. Okay, there is a calls and errors. Okay, now what will be the journal entry which you will pass? Quickly let's do it. Okay, first entry will be bank to share application. How much? 10,000 into 20,000. Second entry, share application to share capital. How much? 10,000 into 2, 20,000. Third entry, share allotment to share capital. How much? 10,000 into 3, 30,000. Okay, now see in the fourth entry what will happen. Okay, now company has asked for the allotment money. Now the company has done its work by asking the money. Okay, by asking the money, the company has made the amount due, which means the company, they are done with their work. Okay, they have asked for the allotment money. Now it is the shareholders' turn to do their duty. Okay, what is the duty? Pay the amount asked by the company. Okay, now see, there is a calls and errors of 1000 shares, which means out of 10,000 shares, if 1000 is not received, the company received only money for 9,000 shares. Okay, the company received money for 9,000 shares only. They have received 27,000. Okay, so now what will be the journal entry? Bank account debit to share allotment account. How much? Allotment account will be credited with 30,000. This will be with 9,000 into 3, 27,000. Okay, and the balance will go to calls in errors account. How much? 3,000. Okay, I hope this is clear. Now let's extend this question. Okay, the company decided to forfeit the 1000 shares on which allotment money was not paid. Okay, now the company decided to forfeit, okay, cancel the shares on which allotment money was not paid. Okay, now we'll pass journal entry for forfeiture. Okay, now we'll pass journal entry for forfeiture. Now see, let's try to understand this part. Okay, very important part. Now what is the forfeiture? Okay, what is the concept of forfeiture? You have to understand. Okay, in this case, in this concept, there is a gain for one party and there is a loss for another party. Okay, now forfeiture, what do you mean by the word forfeiture? Forfeiture means cancel. Okay, forfeiture means cancel. Basically we will cancel something. What we will cancel, we don't know. Okay, we'll discuss now. Now see, in this example, a shareholder called Mr. Y, he failed to pay what? He failed to pay allotment money. No? Mr. Y who failed to pay allotment money on 1000 shares. Okay, but Mr. Y had paid the application money. No? Okay, is it possible to allot shares to Mr. Y without paying the application money? No. Okay, application money is a must. Then only allotment will be made. No? Now see, Mr. Y has already paid 10,000 into 2 rupees, 20,000 on application. 10,000 into 2. Okay, now Mr. Y has already paid rupees 2 per share on application. Right? Mr. Y has already paid rupees 2 per share on application. Okay, so what is the amount paid by Mr. Y? 10,000 into 2. Right? 10,000 into How much he has already paid? He has already paid 20,000. Okay, now wait, he has been allotted 10,000. He has been allotted 1,000 shares. No, sorry. Okay, he has been allotted 1,000 shares. Now on application, how much he has paid? He has paid 1,000 into 2. Okay, now he has paid 1,000 into 2. Sorry, he was allotted 1,000 shares. Okay, total shares is 10,000. Out of 10,000, Mr. Y was given 1,000 shares. Okay, so in this 1,000 shares, Mr. Y has already paid rupees 2 per share. Okay, Mr. Y has already paid rupees 2 per share, right? On application. Without paying the application money, is it possible to allot shares to Y? No. Okay, I will repeat it again. On application, Mr. Y, he has already paid 1,000 into 2, 2,000 rupees. Okay, because he had applied for 1,000 shares, the company allotted 1,000 shares, and he has paid 1,000 into 2, 2,000 rupees on application. Okay, now see, Mr. Y failed to pay the allotment money. Okay, Mr. Y failed to pay the allotment money. Okay, how much he has failed to pay? He has failed to pay 1,000 into, what is the amount of allotment? Rupees 3. Okay, he has failed to pay rupees 3,000. He has failed to pay this. Okay, now in case of forfeiture, what will happen? Okay, in case of forfeiture, what will happen? I have told you, one party will gain and the other party will lose. Okay, now see, the capital which the company has, which the shareholder has invested. Okay, so for example, the company, the investor has invested money at this point. Okay, the business was carrying on at this point. Now at this point, the company comes to an end. Okay, now what will happen? The capital, okay, invested by the shareholder is a liability for the company, right? So the company will have to pay back the share at this point, right? The company will have to give back the capital amount at this point. Okay, now in case of forfeiture, what will happen? As Mr. Y failed to pay the allotment money, okay, he has failed to pay the allotment money, the company decided to cancel the shares. Okay, so in this case, what will happen? The money which he has already paid on application, okay, the money which he has already paid on application will not be given back to Mr. Y. Okay, because he was allotted shares. Okay, he was allotted shares and he was asked to give money on allotment, but he failed to give. Okay, anything may be the reason. Okay, we don't have to think about the reason, what would have been the reason. Okay, there is no exception in this case. So whatever money he has given, okay, in our example 2,000 rupees on application, that will not be given back to Mr. Y. Okay, so now this 2,000 is a gain for whom? Gain for the company. Gain for the company is 2,000. Loss for Mr. Y is 1,000. Sorry, 2,000. Okay, 2,000 loss for Mr. Y is 2,000. Now we are passing journal entry from the point of view of the company. We don't have to think about the journal entry for Mr. Y. Okay, now it is a gain for the company. Okay, now if it is a gain, what will be the treatment? Okay, what will be the treatment? We will see. This gain of 2,000 will be transferred to which account? It will be transferred to shares forfeited account. Okay, since it is a gain, it will be transferred on the credit side. Okay, it will be transferred on the credit side as share forfeited account. Okay, I hope this is clear. Okay, now let's see what is the journal entry which we will pass on forfeiture. Okay, on forfeiture of 1,000 shares. Okay, what is the journal entry which we will pass on forfeiture of 1,000 shares? Now see, we are cancelling how much? We are cancelling 1,000 shares. Okay, we are cancelling 1,000 shares. Now see, what will be the journal entry? Now we are cancelling the capital. No? We are cancelling the capital. Okay, basically this 10,000 includes 1,000 share. This 10,000 includes 1,000 share. Okay, this application value, because Mr. Y has paid the application value. Now what will happen? Out of this 10,000, 1,000 share capital will be cancelled. Okay, it will be cancelled. Now if the capital is to be cancelled, okay, when we raise the capital, when we make our liability, we credit the capital account. Okay, we credit the capital account. Now if we have to cancel, what we'll have to do? We'll have to debit the capital account. Okay, so what will we do? We will debit share capital account. By how much amount? By how much number of shares? By the shares which we are cancelling. Okay, 1,000. Now into how much? Will we do into 10? Because the face value of the share is 10? No, because in this case only how much has been called? Rupees 2 on application and rupees 3 on allotment has been called. Okay, the company has made liability for only 5 rupees. Okay, so if the company has made liability for 5 rupees, we will cancel 5 rupees only. Okay, 5 rupees. So 5,000 will be the share capital account. Okay, now I have told you there is a gain of rupees 3. Okay, gain of rupees 3. Where will it go? It will go to share forfeited account, or you can say forfeited shares account. Okay, how much? 10,000 into 2 application money. Okay, now where will the balance go? It will go to calls in arrears. 1,000 into 3. How much? 3,000. See, here we have debited calls in arrears account. We debited calls in arrears account. Now here we will credit the calls in arrears account. Okay, now this calls in arrears account will be closed. Okay, I hope this is clear. This share forfeiture account means this is a gain. This is a gain for the company. So it will go on the credit side of share forfeiture account. Okay, I hope this is simple and easy and clear to understand. Okay, now you can note this down if you want. Okay, you note this down. Okay. There is a concept of reissue also. Okay, there is a concept of reissue also. Now we will discuss that in later video. Okay, in the later part of the video. Now see, let's come back to the question once again. I hope this is still clear. Okay, now for those students also who are facing, I know many students used to face problem in this chapter. Okay, forfeiture of shares. Okay, but I hope with this explanation somehow things will be clear. Okay, now see, let's come back to the question. The directors of T Limited resolved that 2,000 equity shares of rupees 100 each to be forfeited for non-payment of second call. Okay, so how much is to be forfeited? How much is to be forfeited? 200 shares is to be forfeited, means it has to be cancelled. Okay, for non-payment of second call and final call of rupees 30 per share. Okay, so what is the amount of calls in arrears? This should be end. Okay, and what is the amount of calls in arrears? 200 into 30 will be 6,000 is the calls in arrears amount. Okay, 6,000 is the calls in arrears amount. Right, now out of this 1,150 shares were reissued at rupees 60 per share as fully paid up. Okay, how much amount will be transferred to capital reserve account? Right, so for this, let's solve this question as a journal entry. Okay, let's try to solve a journal entry for this. Okay, 177. So what will be the share capital account? What will be the amount transferred to share capital account? Let's see. How much has been cancelled? 200 shares has been cancelled. Okay, 200 shares have been cancelled. And how much has been called? Nothing is mentioned. So we'll say that 100 rupees is called up. Okay, 100 rupees is called up. Right. So what will be the amount? 200 into 100 will be how much? 20,000. 20,000 has been called up. Okay, so we cancel 20,000 shares. Okay, now for non-payment of how much? For non-payment of 30. For non-payment of 30. Okay, if there is a non-payment of 30 out of 100, if the shareholder has failed to pay 30 rupees, how much he has paid? He has paid 70. Okay, so now we know that in case of forfeiture, the company will cancel the shares. Okay, and the 70% which the shareholder has already paid, this will not be paid back to the shareholders. Okay, so basically this 70 into 200 of how much? 14,000 will be a gain for the company. Okay, so where will this gain be transferred? This gain will be transferred to, it will be transferred to forfeited shares account. Forfeited shares account. Okay, how much? 14,000. How? 200 into 70. Okay, and the balance will be transferred to calls in arrears account. How much? 200 into 30. Okay, 6,000. So this is the journal entry you will pass on forfeiture. Okay, on forfeiture of 200 shares. Okay, I hope this is clear. Now what is happening? See, out of this 150 shares were reissued at rupees 60 per share as fully paid up. Okay, now we are reissuing how much? 150 shares at rupees 60 fully paid up. Okay, now see, what is the face value? What is the face value of the share? 100. Now we are issuing it at how much? We are issuing it at rupees 60. Okay, per share. Now what is the loss on reissue? per share. What is the loss per share on reissue? Rupees 40 per share, because the face value is 100. Now see, face value means when we have to pay back, okay, we'll have to pay back 100 rupees. Okay, when we have to, in case of dissolution of a firm, when a firm comes to an end, the shareholders to whom these shares have been issued will be paid rupees 100, 150 into 100, because 150 is the amount which we have, 150 is the shares which we have reissued. Okay, so how much will be paid to them? 15,000 will be paid to them. But how much we are taking from them? We are taking 150 into 60. How much? We are taking 9,000 from them. Okay, so there is a loss of how much? There is a loss of 6,000. There is a loss of 6,000. Okay, so now let's pass this journal entry. Okay, now bank. Now when you reissue, what will happen? Money will come in. Reissue of 150 shares. Okay, out of 200 shares cancelled, we are reissuing 150. So when you reissue, what will happen? When you reissue, money is coming in. Okay, so bank will be increased. So bank will be debited. Bank account debit what comes in? 150 into 60. So how much we are receiving? 150 into 60 is 9,000 rupees. Okay, now to share capital. What is the liability of the firm? Liability of the company? 150 into 100. Right, 15,000 is the liability. Okay, because when the company comes to an end, this 1,150 into 100 will be paid back to the shareholders. Okay, 15,000 will be paid back to the shareholders. Now see, there is a difference of 6,000. Where will this 6,000 go? It will go to forfeited shares account. Okay, so the loss will be compensated from the gain. See, we had a gain of 14,000 when we forfeit the shares. Now we have a loss of 6,000 on reissue. Okay, so this account will be, this 6,000 will be compensated from the, we will take from the gain part. Okay, 14,000 we have gained. Out of 14,000 we have used 16,000 to compensate the loss on reissue. Okay, now the requirement of the question. What is the requirement of the question? We have to find out the amount transferred to capital reserve account. Okay, we have to find out the amount transferred to capital reserve account. Okay, now see, let's find out the amount transferred to capital reserve account. Okay, if you want, you can pause the video and you can record it. You can note this down up to this point. Okay, up to this point, 150 into 100. Okay, now let's see, let's do the final working. Calculation of amount to be transferred to capital reserve account. Okay, so basically whatever is gain, okay, whatever we have gained on forfeiture and whatever we have lost, okay, the difference amount will be transferred to capital reserve account. Okay, this is basically a gain for the company. Okay, now see, gain on forfeiture of 200 shares. How much is the gain? Gain is 14,000. Okay, 14,000. How 14,000? See, 14,000. Okay, now loss on reissue of 150 shares. How much is the loss? 6,000. So what is the difference? Difference is 8,000 rupees. Okay, 8,000 rupees. Now will this be the amount which will be transferred to capital reserve account? 14,000 minus 6,000, 8,000. Will this be the amount transferred to capital reserve account? Because the gain is 14,000 and the loss is on reissue is 6,000. Okay, no, you have to be very careful here. Okay, see, forfeited, how much we have cancelled? We have cancelled 200 shares, but out of 200 shares cancelled, we have reissued only 150 shares. Okay, so we have to calculate the gain on forfeiture of 150 shares. Okay, then only our answer will be correct. Okay, now see, how will we do? This is basically wrong. Okay, this is basically wrong. So how will you do? You will see, we'll have to calculate gain on forfeiture of 150 shares. Okay, and we'll have to less loss on reissue of 150 shares. What is the loss on reissue of 150 shares? 6,000. Okay, so this amount to be transferred to capital reserve. Okay, so now let's calculate this part. Okay, let's calculate this part. So how will we calculate? See, if the total gain on cancellation of 200 shares is 14,000. Okay, if the total gain is 14,000. Okay, this gain is for 200 shares. Okay, if I divide 14,000 by 200, I will get the gain on forfeiture of 1 share. Okay, I will get the gain on forfeiture 1 share, and if I into it by 150, I will get the gain on forfeiture of 150 share, which is 10,500. Okay, so what is the gain? 10,500. So now if I minus 6,000, I'll get the actual amount of 4,500. Okay, so this is my answer for question number 177. Okay, so now you can note this down. Easy and simple. Okay, you don't have to buy out anything. See. Okay, let me repeat this part. Okay, see, the gain was on forfeiture of 200. You have cancelled 200 shares. Now you have cancelled 200 shares, but out of 200 shares you have reissued only 150 shares. Okay, so this 14,000 basically is gain for 200 shares. Okay, but reissue is only 150, right? So what is the amount to be transferred to capital reserve account? See, whatever gain you have on forfeiture and whatever loss you have on reissue, okay, the difference will be transferred to the capital reserve account. But in this case, out of 200 we have reissued only 150 now, so 50 shares is yet to be reissued. Okay, so the balance amount of how much? 14,000. Out of 14,000 we have used 6,000 and we have transferred 4,500 to the capital reserve account. So 3,500 is still left. So this 3,500 will be used, okay, when we reissue 50 shares. Okay, I hope this is clear. So now we are done with question number 177. Now let's see question number 178. The directors of a company forfeited 400 shares of 10 each, fully called up. Okay, so how much has been forfeited? 400 shares, on which 10 has been fully called up. Okay, on which 1,600 had been paid. All the forfeited shares were reissued upon payment of 3,000 rupees. Calculate the amount transferred to capital reserve. So how will we do this? Let's see question number 178. Okay, so amount called up by the company is 400 into 10. They have called up 4,000. Okay, so amount paid by the shareholders is how much? How much they have paid? They have paid 1,600. Okay, they have paid 1,600. Okay, so what is the calls in arrears? Calls in arrears is 4,000 minus 1,600, which will be 2,400. Okay, now the company has forfeited these 400 shares. Okay, they have cancelled these shares. Now the amount which they have received, okay, 1,600, this will be gain on forfeiture. Okay, so what will be the gain? Gain on forfeiture is rupees 1,600, because we know that in case of forfeiture, whatever the amount the shareholders has paid, okay, that amount will be cancelled. It will be forfeited. It will not be given back to the shareholders. Okay, so 1,600. Now the question is saying all the forfeited shares were reissued upon payment of 3,000. Okay, so on reissue, how much the company has received? On reissue, okay, the company received how much? The company has received 3,000 rupees. Okay, 3,000 rupees. Okay, so the company should receive how much? Company should receive 400 into 10. They should receive 4,000 rupees, right? But they have received only 3,000. So what is the loss? Loss on reissue is 1,000 rupees. Clear? So what is the loss? Loss on reissue is rupees 1,000. Okay, so what will be the amount transferred to capital reserve? 600 will be transferred to the capital reserve. Okay, so I hope this is clear. There is no partial reissue. Okay, so whatever has been forfeited, see, whatever has been forfeited has been reissued. Okay, 400 has been forfeited and 400 has been reissued. So the balance amount of 600 will go to the capital reserve account. Okay, so if you want, you can copy this. Now let's see question number 179. The balance of share forfeited account is shown under which head till the forfeited shares are reissued? Okay, the balance of share forfeited account are shown under which head till the forfeited shares are reissued? Non-current liabilities, share capital, reserve and surplus, and unsecured loan. Okay, so where is the where is the amount of balance of share forfeited account shown? It is shown under the share capital. Okay, it is shown under the share capital. So if you see the schedule 3 of Companies Act, you will find out that at last share forfeited account will be shown. Okay, so the answer for 179 is C. Now let's see question number 180. Question number 180. What is the correct sequence of type of capital in company's balance sheet while preparing notes to account? Okay, we know that when we prepare balance sheet, we used to prepare notes to account, right? So what is the sequence? What is the sequence of the balance sheet? We have to see. Okay, what is the sequence of notes to account? The first sequence will be authorized capital. Okay, the authorized capital will be shown first. Okay, then issued capital will be shown next. Okay, then shares are point number B, shares subscribed and fully paid up capital. Point number C, share forfeited balance. Okay, this will be shown at the last, and subscribed but not fully paid up. Okay, so what will be the third? It will be subscribed and fully paid up capital. Fourth will be subscribed but not fully paid up, and at last we will show share forfeited balance. Okay, so what will be the answer for 180? The answer will be D, A, B, E and C. D, A, B, E, C. Okay, so this is the answer for question number 180. Okay, now let's see question number 181. Question number 181. Excess application money received from applicants to whom pro rata allotment has been made is adjusted first towards the amount due on allotted amount of allotment of shares applied or allotment of shares allotted. Where will we show excess money received on application? It will be always shown on in the allotted shares. Okay, allotment of share allotted. Okay, allotment of share allotted. So the answer for 181 will be B, applied. Applied has nothing to do. Okay, applied means how much the shareholder wants. Okay, we are concerned with the allotted part now. We are concerned with the allotted. So for example, applications has been received for 90,000 shares and the company can issue maximum is 40,000, right? So those who had applied for 9 shares will get 4 shares. Okay, so in share application number, how much will go? 40,000 shares will go, na? 90,000 has nothing to do. Okay, so what will be the answer of 181? It will be B. Okay, now see question number 182. Question number 182. Identify the statement that is or are not true from the following. Okay, we have to identify the false statement. Okay, we have to identify the false statement. Now see point number A. Shares can be forfeited for non-payment of call money. Okay, can we forfeit shares for non-payment? Yes, this is true. Okay, and point number B. The profit on forfeited shares is transferred to capital reserve. Okay, the profit on shares forfeited transferred to capital reserve. Is this true? Yes, right. Gain, we used to calculate loss on gain on issue of forfeiture, then we used to calculate loss on reissue of forfeited shares, then the balance amount will be transferred to capital reserve. Okay, it used to be transferred to capital reserve. So this statement is also true. Now see point number C. Balance of share forfeited account is shown in the balance sheet under reserve and surplus. Okay, reserve and surplus, no. Where it is shown? It is shown under share capital. Okay, so this is false. Okay, it is shown under share capital. Okay, so the point number C is false. Okay, now see D, point number D. Application money should be at least 5% of the face value of shares. Okay, application money, what is the minimum? What is the minimum application money? It will be 5%. Okay, it should be 5%. Okay, so if the face value is rupees 10, so what will be the minimum application money which we will ask for is 0.5. okay, so it cannot be less than 0.5 the application money. Okay, so this is what the statement is false. Okay, so it should be 5%. Okay, now see point number E. Application money cannot exceed 1/4 of the face value of shares. Okay, is this true? Yes. Okay, true. So if the face value is 100, if the face value is 10, what will be the maximum application money? 1/4. Okay, so the maximum application money will be 2.5. okay, so what is the answer for question number 182? The answer is C and D. C and D. Okay, we have to find out the statements which are not correct. Okay, which are not true. Not true. Okay, so the answer is C and D. Okay, now see question number 183. Arrange the following steps as per the procedures of issue of shares. Okay, we have to arrange as per the procedure of issue of shares. Okay, so what will be the first first will be issue of prospectus, right? Issue of prospectus. The company will issue prospectus first, then the company will receive the application money, okay, then there will be allotment of shares, then if there is any shareholder who has failed to pay the money, they will forfeit the shares, and at last the forfeited shares will be reissued. Okay, so what will be the answer for 183? D, A, B, E, C. Okay, so this is the answer for question number 183. Okay, I hope this is clear. Now let's see question number 184. ABC Limited forfeited 1000 shares of 10 each. They have forfeited 1000 shares of 10 each, on which shareholders had paid only application money of rupees 3. Okay, so what is the amount the company has received? 1000 into 3. Okay, out of this 400 equity shares were reissued as fully paid, okay, for rupees 9 per share. Okay, so what is the fully paid amount? 9 per share. The gain or on reissue of shares transferred to capital reserve is, what is the amount? Okay, so let's see this. 184. Question number 184. Okay, so what is the gain on forfeiture? What is the gain on forfeiture? See, they have received rupees 3, right? Had paid only rupees 3. Okay, so they have received 1000 into 3. Okay, so whatever they have received, the company has received, this will be forfeited, right? The shareholders will not get back this amount. Okay, so how much has been forfeited? Rupees 3000. Okay, so this is the gain for the company. Okay, out of this, how much has been reissued? 400 has been reissued. Okay, 400 has been reissued. Now see what will be the gain on reissue. Okay, let's calculate. Okay, gain on reissue of 400 shares. Okay, what will be the amount? We'll have to calculate. Okay, now see how will we solve this type of question. Now what is the journal entry for this? On reissue, bank account debit to share capital account, right? So how much they have received? They have received, see, they have reissued 400 shares, were reissued as fully paid up rupees 9 per share. Okay, so how much is fully paid up? 9 is paid up. Okay, so 400 into 9 will be how much? 3600. And what is the share capital amount? It will be 400 into 10. 400 into 10, it will be 4000 rupees. Okay, so what is the loss? It will be taken from the forfeited shares account. How much is the loss? 400 is the loss. Okay, it will be taken from the forfeited shares account. Why 10? Why we have taken 10 here and not 9? Okay, because see, the face value is 10. I have told you share capital will always be credited with the face value. Okay, because the question has said as fully paid up rupees 9. Okay, the shareholders to whom these shares have been issued have paid 9. Okay, basically this has been issued less than the face value. Okay, so 10 is the face value and it has been reissued at rupees 9, so 1 rupees per share will be the loss. Okay, so now we have to calculate the gain. Okay, so what is the gain on reissue of 400 shares? Sorry, this will be loss. Now what is the loss on reissue? Loss on reissue of 400 shares is 400 rupees. Okay, 400 rupees. Now this gain is for 1000 shares, this loss is for 1000 shares, and the gain is for 400 shares. Now what we have to do, we have to find out the gain for 400 shares. Okay, so let's see, let's write here. Okay, so what is the gain on forfeiture of 400 shares? Let's calculate. Okay, 400 shares. Okay, so see, if 3000 is the gain on 1000 share, okay, if 3000 is the gain on 1000 shares, okay, what will be the gain on 400 shares? 3000 is the gain on 1000 shares, so the gain on 400 shares will be 1200. Okay, so what will be the amount transferred to capital reserve account? 800 will be transferred. 800 will be transferred to capital reserve account. Okay, so this is the answer for question number 184. Okay, so if you want, you can copy this. I hope this is clear. 184. Now see question number 185. Okay, let's solve question number 185. Okay, now if a share of rupees 100 on which rupees 45 has been paid is forfeited, okay, is forfeited, at what minimum price can it be reissued? Okay, let's see what's the question saying. Question number 185. Okay, if the face value is how much? The face value is rupees 100. Okay, the face value is rupees 100. Okay, and we have received, the company has received how much? 45. 45 has been paid. Okay, what has been paid? 45 has been paid. Okay, paid is rupees 45. What is the unpaid amount? Rupees 55 is the unpaid amount on the shares. Okay, now what's the requirement of the question? At what minimum price can it be reissued? Okay, at what minimum price can it be reissued? So what will be the answer? The answer will be 55. Why 55? Because see, out of 100 we have received 45. Okay, so what is the amount which we have not received? We have not received 55 rupees. Okay, so this is the minimum price on which the shares can be reissued. Okay, I hope this is clear. Out of 100 we have received 45, so we have not received 55, right? So we have to receive this amount, 55 rupees per share. Okay, so this is the minimum price which we can issue. So the maximum discount which we can give is 45. Okay, so the answer of this the question is rupees 55 per share. Okay, I hope this is clear. Now see question number 186. If a share of rupees 10 on which 8 is called up and rupees 6 is paid is forfeited. Okay, state with what amount the share capital account will be debited. Okay, with what amount the share capital account will be debited. Okay, what's the requirement of the question? Let's see it again. If a share of rupees 10 on which 8 is called up. Okay, so what is the face value? Question number 186. What is the face value? Face value is rupees 10. Okay, how much the company has called? The company has called rupees 8. Called up amount is rupees 8 and the paid up amount is rupees 6. Okay, now see, out of 10 face value the company has called only 8. Okay, so the company has called only 8 rupees. Okay, so what will be the amount transferred to share capital account? It will be how much? Rupees 8 per share. Rupees 8 per share. Rupees 8 per share. Okay, now what's the question asking? State with what amount the share capital account will be debited. Basically, if we forfeit the shares, okay, with what amount the share capital account will be debited? It will be debited with rupees 8. It will be debited with rupees 8. Okay, so for those who don't understand, let's do it through a journal entry. Okay, so what is the first entry? Bank to share application, right? The next entry is share application to share capital. Okay, and the third entry is share allotment to share capital. Okay, now see, out of 10, okay, the company has called only 8. Now the company has called only 8. Okay, the company has called only 8. So what is the amount which will go to the capital account with these two entry? Okay, the total amount which will go is 8. Okay, so the liability will be rupees 8 per share. Rupees 8 per share. Okay, now if we are forfeiting this, so how much it will be debited? Okay, it will be debited with rupees 8 only. Okay, so on forfeiture, what is the journal entry we pass? What is the journal entry we pass on forfeiture? The journal entry we pass is share capital account, because we are cancelling this share now. Share capital account to calls in arrears to forfeited shares account. Okay, so 8 will go here. How much the company has received? The company has received 60. 6 is paid. Okay, so the company has received 6. So 6 will be the gain and 2 will be the loss for the company. Okay, I hope this is clear. So the answer for this is rupees 8. Rupees 8 per share. Okay, now let's see question number 187. 187. Okay, a company issued 25,000 shares and receive application for 35,000 shares. Okay, there is oversubscription. The company wants to allot share to everyone who has applied. Okay, everyone who has applied. What will be the ratio for allotment? Simple. Okay, simple. 187. Question number 187. Okay, what is the applied? Applied is equal to, the shareholders has asked for how much share? The shareholders has asked for 35,000 shares. Okay, applied is 35,000 shares. And how much the company can allot? The company can allot maximum share is 25,000. Okay, allotment will be done for 25,000 shares. Okay, so if I remove this 30, I will get 35 is to 25. Okay, so if I divide this by 5, I will get 7. If I divide this by 5, I'll get 5. Okay, so 7 is to 5. So what will be the answer? What will be the ratio? Those who had applied for 7 shares will get 5 shares. Okay, so what will be the ratio? The ratio will be 7 is to 5. Okay, 7 is to 5. Those who had applied for 7 shares will get 5 shares. Okay, now how other students used to do, how other teachers used to teach is, there is a formula. Okay, they will say share applied divided by share allotted. Okay, this is the formula. Okay, so if share applied is 35 and if share allotted is 25, what will be the ratio? 7 by 5. The ratio will be 7 is to 5. Okay, you can do it this way. This is the first way to do it. Okay, this is how I do. This is the first way. Or if you understand this better, you can do it this way also. Okay, both are same. There will be no difference. Okay, the answer will be same. I hope this is clear. Now let's see question number 188. 188. A company issued 10,000 shares of rupees 10 each. Amount is payable as rupees 2 on application, rupees 5 on allotment, and rupees 3 on first and final call. A shareholder who had 1,000 shares failed to pay allotment and first call amount. Okay, failed to pay allotment and first call amount on due date. Okay, when the company asked for the money, the shareholder who had 1,000 shares, he failed to pay the allotment and first call amount. Okay, but after a month he paid the due amount. Okay, so he has paid what? He has paid 1 month late. Okay, what will be the amount received by the company against issue of shares? Simple. See, the company has asked for 1,000 shares of 10 each. Okay, now there is a shareholder who had 1,000 shares. Okay, he had failed to pay the allotment and call money. Okay, so if he had never paid, there would be calls in arrears, but after a month he has paid now. So what is the amount the company has received? Simple, 10,000 into 10 will be 1 lakh. Okay, so this is the answer for question number 188. Okay, now see question number 189. Interest on calls in arrears is charged according to table F at, what is the interest on calls in arrears? Okay, if there is any calls in arrears, the company will charge interest. Okay, so the answer will be 10%. You have to remember this. Okay, you have to remember this. The answer is 10% for question number 189. Okay, now let's see question number 190. X Limited forfeited 20,000 equity shares of rupees 10 each. Okay, the company forfeited 20,000 equity shares of 100 each for non-payment of first and final call of rupees 40 per share. Okay, so the company had forfeited 20,000 shares. Okay, for non-payment of 40. Okay, so out of 100, if there is non-payment of 40, what is the amount paid? The amount paid is 60. Okay, now the question is asking us the maximum amount of discount at which these shares can be reissued will be. Okay, what will be the maximum discount the company can give? See, what was the face value? The face value was 100. Okay, so out of this 100, they did not receive 40. Okay, so what is the received amount? They have received 60. Okay, so not received is 40. Okay, they have not received 40. So what is the maximum amount they can give? The maximum amount of discount they can give is rupees 60 per share. See, whatever they have received. Okay, now they have not received rupees 40 per share. Okay, so this will be forfeited, right? Now on reissue, what is the maximum discount they can give? The maximum discount they can give is the number of the amount per share which they have already received. Okay, so what will be the answer for this? The maximum discount will be 20,000 into 60 will be what will be the answer? 12 lakhs. Okay, this is the discount they can give. Okay, the maximum discount they can give. Okay, so we are done with question number 190. Now let's come to question number 191. Okay, question number 191. On forfeiture of 100 shares, of 50 each, rupees 2500 were credited to share forfeited account. Okay, these shares were reissued at 25 per share, fully paid. The amount credited to capital reserve is, okay, what's the answer question saying? On forfeiture of 100 shares. Okay, let's see question number 191. Question number 191. Okay, on forfeiture of 100 shares of 50 each, 2500 were credited to share forfeited account. Now what do we mean by credited to share forfeited account? Basically this is the gain on forfeiture. Okay, this is the gain on forfeiture. So what is the gain on forfeiture? Gain on forfeiture is 2500. Okay, I'll explain why it is, why the question is saying credited to share forfeited account and how it is a gain. Okay, now see, when you pass your journal entry on forfeiture, on forfeiture, okay, so what is the journal entry you will pass? You will say share capital account, okay, to forfeited shares account to calls in arrears. Okay, so what is the amount which will be transferred to capital account? 100 into 50. Okay, 100 into 50. So 5000 will go here. Okay, and 2500 has been credited to share forfeited account. Okay, so 2500 has been credited to it. Yeah, 5000. 2500 has been credited to share forfeited account. So this is basically a gain for us, no? So this is a gain for us. Okay, so I hope this is clear. Okay, so just drop this. Okay, now see what's the question saying. These shares were reissued at rupees 25 per share, fully paid. How much? 25 per share, fully paid. Okay, now see how much the company has received. Amount received on reissue is how much? They have received 25 per share. Okay, 25 per share. So what is the amount they receive? 100 into 25 is 2500. Okay, they have received 2500. How much they should receive? Amount to be received is 100 into 50. Why 50? Because see, the face value is 50. The face value is 50. Okay, so they have received 25 per share, fully paid. See, fully paid up. Okay, this should be fully paid. Okay, so the fully paid is 25, so there is a loss of 25 per share. Okay, so they must receive 5000. Okay, so what is the loss on reissue? Is 2500. Okay, so the gain is 2500 and the loss is 2500. So how much will be transferred to capital reserve account? Nothing. 0 will be transferred. Okay, so nil. 0 amount will be transferred to share capital reserve account. Okay, I hope this is clear. Okay, now we are done with share capital, questions from share capital. Okay, I have one question left. Okay, I have left one question. We'll see that and we'll move to debenture capital. Where was the question? Yeah, see, 153. Okay, I had left this question 153. Now let's see this question 153. Voluntary return of shares for cancellation by the shareholder is called. Okay, voluntary return. See, the key point here is voluntary return. What do you mean by voluntary return? Voluntary return means the shareholder himself, he is cancelling the share. Okay, he don't want to be the shareholder anymore, he wants to cancel the share. Okay, so what will this be called? Will it be called cancellation of shares? Will it be called forfeiture? Will it be called surrender, or none of this? Okay, so when is it called cancellation of shares or forfeiture of shares? When the company forfeits. Okay, now there is a shareholder who has not paid the money and the company asks for the money, but the shareholder could not pay, so the company has decided to cancel the shares. Okay, but in this case the shareholder himself, he is saying that I cannot pay the balance amount, you please cancel the share. Okay, so such type of transaction will be called as surrender of shares. Okay, surrender of shares. So the answer for 153 is surrender of shares, C. Okay, I hope this is clear. I hope this is clear. Okay, now we are done with issue of share capital question. Okay, now let's move to debenture capital. This chapter is a bit lengthy. Okay, it will take time, but I hope with these questions, okay, your preparation will be full-fledged. Okay, so now let's see debenture capital. Okay, now before moving to debenture capital question, let me briefly explain what is debenture capital. Okay, now in case of company, we will discuss about debenture capital. Okay, now in case of company, we know that what is the source of company. The source of company, there are two sources basically, okay, which we will discuss as per your syllabus. Okay, so what is the first source? The first source is share capital. The first source is share capital. Now in this there are two types, equity share capital and preference share capital. Okay, there are two types, equity share capital and preference share capital. Okay, now the second source, now we have discussed about this share capital in detail, we have solved the questions. Okay, now we'll come to the second source. Okay, now what is the second source? The second source is debentures, bonds, loans, okay, and other instruments. Okay, now in your syllabus we'll discuss only debentures. Okay, we'll not talk much about bonds and loans. Okay, loan is basically simple. Now if the company wants to take loan, they go to the bank or other financial institution, they take the loan and they pay interest for that. Okay, so this is, I don't think this is to be explained. Okay, so bonds basically you will not be discussed this in your syllabus. Okay, now basically it's same. Okay, it's same as debentures. Okay, you can understand as of now it's same as debenture. Now we'll discuss about debenture basically. Okay, so what is a debenture? What is a debenture? Okay, debenture capital. Okay, debenture is a debt instrument issued by the company, okay, bearing fixed rate of interest. Okay, now see, company is in need of some funds. Okay, what will the company do? The company will have two options. Okay, either issue equity shares or preference shares. Okay, or the company can issue debenture, bonds and loans. Okay, basically we will discuss only about debentures. Okay, the company will issue debentures. Now what is debenture? Debenture is a debt instrument. Debenture is a debt instrument issued by the company bearing fixed rate of interest. Okay, so basically this is a debt instrument. Okay, now let's see owners. Okay, I have told you that equity shareholders are the owners of the company. Owners of the company. Now in case of debenture holders, okay, can I say they are the owners of the company? No, they are not the owners of the company. Debenture holder basically are the lenders of the company. Okay, they will give a loan to the company in the form of debenture. Okay, now this is same as equity shares. Okay, slight difference is there. Okay, so let's discuss the difference. Okay, first difference. Okay, the first difference is voting rights. Okay, in case of debenture and equity, let's say share capital. Okay, share capital. Okay, now will debenture holder get any voting right? Debenture holder will not get any voting right. Okay, will equity shareholder, preference shareholder get? Yes. Okay, preference shareholder, they will not get all the voting right, but there are certain situations where preference shareholders will also get the voting rights. Okay, now what is the situation? When dividend has not been paid for continuous 2 years, okay, and when the voting is required for which concerns the preference shareholders. Okay, basically if they are it is with the concern of the equity share preference shareholders, okay, they will have the right to vote, and in case of winding up of a company, they will have the right to vote. Okay, now let's see point number 2. Okay, now voting rights we have discussed. Debenture holders will not get any voting rights, shareholders will get voting rights. Okay, now the second point of difference is return. Okay, now what is the return debenture holder will get? They will get interest. Okay, and the shareholders will get dividend. Okay, now third point, is the return fixed? Yes. Okay, yes, for debenture holders paying interest is a must. Okay, irrespective of the firm is earning profits or not. Okay, irrespective of the fact that the firm is earning profits or not, interest has to be paid. Okay, is interest mandatory? Interest or dividend mandatory? Yes. Okay, in case of debenture holder, irrespective of whether the firm is earning profits or not, interest payment is a must. Okay, in case of share capital, payment of dividend, is it mandatory? No. Okay, it is not mandatory. If the company wants, the company can give dividend. If the company don't want, the company will not give dividend. Okay, basically this will be discussed in the AGM. Okay, this is another topic. There used to be AGM. Okay, first the board of directors of the company will propose the dividend. Okay, then it will go to the AGM, annual general meeting. They will discuss with the shareholders whether they want dividend or not, whether the rate which the board of directors has proposed, okay, whether they are satisfied with the rate of dividend or not, everything will be discussed. Then only the dividend will be declared. Okay. Point number 4, interest. If interest or dividend mandatory, yes. In case of debenture holder is yes, and shareholders is no. Okay. Now, what is the fourth point of difference which we will discuss here is, okay, so the fourth point which we will discuss here is, let's say, what will be the fourth point? Who will be paid first? Okay, who will be paid first? Okay, now in case of profits, okay, distribution of profits, who will be paid first? Let's see. Okay, so debenture holders, the interest will be paid first to the debenture holders. Okay, the interest to the debenture holders will be paid first, and after payment of dividend and outside liabilities, the shareholders will be paid. Okay, so in case of equity shareholders and preference shareholders, in case of these two, preference shareholders will get first, then equity shareholders will get, okay, dividend, or yeah. Okay, I hope this is clear. So now what will happen? How company will issue debenture? Let's see. Okay, it will be same as equity shares. Okay, number will be there. Okay, number of debenture. So for example, 50,000 debenture of rupees 100 each. Okay, so the number will be 50,000 and the face value of one debenture will be 100 rupees. Okay, so 50 into 100 will be 50 lakhs. Okay, 50 lakhs. So the company will issue debentures same way as they issue shares. Okay, so this is a company. So the company will give a certificate called debenture certificate to the debenture holder. Okay, debenture holder. See, this is a debt instrument. Okay, so this certificate it will be a normal, it will be in a legal paper. Okay, and company's name will be there. Okay, so all the important details regarding number of shares, okay, face value, issue price, and what is the name of the debenture holder, the company's director signature will be there. Okay, so this will be a written document. Okay, written document issued by the company to the debenture holders. Okay, it will be a written document under the common seal of the company, Okay, so this will be a written document. I hope this is clear. Now let's discuss few more points. Okay, now one question. Okay, can debentures be issued at a premium? Can debentures be issued at a premium? The answer will be yes. Okay, if the face value is 100 and the company wants to issue it at 150 rupees or 120, let's say, okay, 120 rupees, can the company do that? Yes. Okay, so what is the extra amount the company is getting per debenture? Rupees 20. Okay, this is clear. Now at par means simple, face value is 100 and the company is issuing it at 100. Okay, so there is no obligation for, there is no prohibition for this, and premium also there is no prohibition. Okay, now let's discuss about discount. Okay, can debentures be issued at a discount? Okay, the answer is yes. Okay, the answer is yes. If the face value is 100 and if the company wants to issue it at 9 at a loss of 10 per debenture, 90 at a loss of 10 per debenture, can the company do this? Yes, the company can do this. Okay, in case of share capital, see, in case of share capital, okay, at par is allowed, at premium is allowed, at discount is not allowed. Okay, but in case of debentures, par is also allowed, premium is also allowed, discount is also allowed. Okay, now see, say for example, this debenture is issued for 10 years. Okay, for 10 years, so there will be a maturity period of the debenture, okay, for which it will be issued. So say for example, here the company has issued debentures and this is the 10 years. Okay, this is the 10 years, and now here the company is repaying the debentures. Okay, the company is paying back the debenture. Basically debenture is a loan. Now say for example, the company has taken loan of 1 lakh rupees, okay, at 12% interest. Okay, so for 10 years the company will pay the interest, and after 10 years the company will pay the principal amount. Okay, principal amount. Now let's talk about repayment. Okay, repayment of debentures. Now when we issue debentures, what will happen? Money will come into the business. We are taking money from the debenture holders and we will give them debentures of the company. Okay, money will come into the business. Okay, and we will give debentures, number of debentures to the debenture holders. Okay, now repayment of debt. Now after 10 years, say for example the debenture has been issued for 10 years. Okay, so after 10 years, this 1 lakh rupees which the company has taken, this has to be repaid. This has to be repaid to the debenture holder. Now what will happen? The money will go out from the company and the debentures, the liability also will be finished. Okay, so now repayment of debenture. Now let's talk about repayment of debenture. Okay, can debentures be redeemed at par? If the face value is 100, can we redeem it at redemption value? Can we redeem it at 100 rupees? Yes, we can do this. Okay, we can do this. Now let's see at premium. If the face value is 100, we want to redeem it at rupees 105. Okay, can we do this? Yes. Okay, basically if it is for 100 rupees, if the price of debenture, the cost of debenture is 100 rupees, but we want to repay rupees 105, 5 rupees extra, can we do this? Yes, we can do this. Okay, so this rupees 5 per share per debenture is a loss for the company because they are paying 105. Okay, they should pay 100 rupees, but they are paying 105. Okay, 5 rupees extra. Okay, I hope this is clear. This is loss for the company, loss for the company, and gain for the debenture holders. Okay, gain for the debenture holders. Now let's talk about discount. Okay, discount. So for example the face value is 100, the company wants to redeem it at rupees 90. Can the company do this? No. Okay, redemption of debentures at discount is not allowed. Okay, it's not allowed. Okay, so now I hope this is clear. Okay, if I have to sum up, if I have to write the crux for you, at the time of issue, at the time of, let me write it nicely. Okay, you can copy this. At the time of issue, at the time of repayment. Okay, so see, can it be issued at par? Yes. Can it be repay at par? Yes. Can it be issued at premium? Yes. Can it be redeemed? Can it be repaid at premium? Yes. Now discount, can we issue at discount? Yes. Can we repay at discount? No. Okay, so this you can write it down. Okay, if you want to. Okay, at the time of issue, at par, at premium is allowed. You can write this, you can note this down. Okay, I hope this is clear. Now we can, I guess we can move to the questions now. Okay, this is all about the basic concepts. Okay, now let's see the question number 192. Okay, question number 192. We'll start with debenture capital questions now. Okay, now see what's the question saying. The company purchased plant with a book value of rupees 190. Okay, the company has purchased plant for rupees 190. Okay, from NV company and agreed to pay via issuing 2000 10% debentures of rupees 100 each at a discount of 5%. Okay, amount that will be credited to 10% debenture account will be, okay, this is basically concept of purchase consideration other than cash. Okay, purchase consideration other than cash. Now let's see how will we solve this. Question number 192. Okay, so we are discussing purchase consideration other than cash. Okay, see, the formula will be same as issue of shares. What will be the number of debentures? The motive of this question is to find out the number of debentures. Okay, so what will be the number of debentures? Amount payable divided by issue price. Okay, so in our case, what is the amount payable? See, they have purchased it for 190. Sorry, yeah, they have purchased it for 190 rupees. 190. Okay, book value was 190. Okay, 190. And what is the issue price? Let's calculate the issue price. Okay, what is the face value? Let's see first. The face value is 100. Okay, see, 100. Okay, it has been issued at a discount of 5%. Okay, it has been issued at a discount of 500. So if the face value is 100, if the face value is rupees 100 and the discount is 5%, it will be Okay, what will be the issue price? The issue price will be 95. Okay, so 95 will come. So what is the number of debenture? 2000 debentures. Okay, 2000 debentures. Okay, 2000 debentures. Now what is the requirement of the question? The question is saying amount that will be created to 10% debentures account. Basically, what is the liability we will show in the 10% debentures account? Okay, let's see how will we do this. Now if you have to pass a journal entry, how will you do? Plant is coming in, plant account debit, okay, plant account debit. 2, we are issuing how much? We are issuing 10% debentures to NV company. Basically first we will show the liability. Okay, NV company. Okay, so 190. Okay, now we'll be paying what? We'll be paying debentures. Okay, we will settle the account of NV company by issuing debentures. Okay, now NV company account debit to how much? To 10% debentures. See, we are issuing 10% debentures. Okay, we are issuing 10% debentures. Okay, so what is the debentures? 10% debentures. Okay, now we have calculated the number of debentures is 2000. Okay, so what will be the amount? 2000 into face value. Okay, always remember, okay, in case of debentures and shares, share capital and debenture, okay, the face value will come here. Okay, the face value will come here. So what is the face value? The face value is 100 each. Okay, so what will be the answer? 2000 into 100. Okay, so basically the liability is 2 lakh. Okay, so what is the amount? Now we had to pay 1,90,000, but now we are paying 2 lakh. Okay, so what will be the difference? Discount on issue of debentures. How much? 10,000. Simple. Okay, I hope this is clear to you. This is the journal entry, right? So what was the answer of the, what was the requirement of the question? Amount that will be created to 10% debentures account. What will be the amount? It will be 2000 rupees. Okay, simple. Now you don't have to pass this journal entry. Okay, I have just shown you to explain. What you can do is, see, the shares is 2000. Okay, now simply what you will do, 2000, you know that face value will go to the debenture account. Okay, so the face value is 100, so 2 lakh will go to the debenture account. Okay, I hope this is clear. So now you can note this down if you want. Okay, now we are done with 192. Now let's see question number 193. Okay, the money received from applicants to whom no debentures have been allotted will be what? Refunded. Simple. We don't have to even see the options. Okay, if nothing has been allotted to them, so the money will be refunded. Okay, so answer for 193 is refunded. Now let's see question number 194. What other name is given to debentures being kept as additional security? Okay, what other name is given to debentures being kept as additional security? So what is the answer? It is collateral securities. Okay, collateral securities. Okay, now many students used to skip this collateral securities. Okay, many students used to skip this concept of collateral securities. You will get to see this option in many questions. Okay, in the coming questions you will get to see a lot of options. Okay, as collateral securities. So when the next question comes, okay, I will discuss what is collateral securities in detail. Okay, so as of now I'll move with next questions. Okay, with the next question. Now when other option comes for collateral security, I will discuss that in detail. Okay, students used to leave this concept. Okay, collateral securities, they would say it's not important. Okay, but you are giving CUETs. Okay, so the examination will not see whether you have studied or not. Okay, you will get questions on this. So now let's move to question number 195. Okay, so Romi Limited purchased building worth rupees 1,50,000, machinery worth rupees 1,40,000, and furniture worth rupees 10,000 from XYZ company. Okay, and took over its liabilities of 20,000 for a purchase consideration of 3,15,000. Okay, they paid the purchase consideration by issuing 12% debentures of 10 each at a premium of 5%. What will be the number of debentures issued by Romi Limited? So let's see 195. Okay, question number 195. Okay, so they have purchased machinery building 150. Okay, building 150, machinery how much? Machinery 140, machinery 140 and furniture for rupees 10,000. Furniture for rupees 10,000. Okay, so now furniture 10,000. Okay, and they have taken their liabilities of 20,000. Okay, they have taken their liabilities. So what is the total assets? Total assets is 150 plus 140 plus 10 will be 3 lakhs. Okay, 3 lakhs, and they have taken their liabilities of how much? 20,000. Okay, 20,000. So what is the net assets they have purchased? The net asset is 2,80,000. This is the net assets. Okay, 2,80,000. Okay, this is the amount they should ideally pay, but how much they are paying? See, they are paying 315. Okay, the purchase consideration is 315. Okay, so they are paying 315. So what is the purchase consideration? 315. Okay, now what is the requirement of the question? Number of debentures. Okay, we have to find out the number of debentures. So what is the number? How will we find number of? What is the formula? Amount payable by issue price. Okay, now see what students used to, the mistake students used to do is, there is two amount given here. Okay, net assets and purchase consideration. Okay, you have nothing to do with net assets. Okay, question has given you to confuse this. Okay, so the students will calculate this and they will use 2,80,000 in the amount payable. Okay, see, the question is clearly said what is the purchase consideration. Purchase consideration means the amount which you have to pay for the purchase. Okay, it's 315. Okay, so amount payable will be 315. Be very careful here. Okay, 315. What is the issue price? Let's calculate issue price. Face value is 100. It is issued at a premium of 5, so it will be added, right? So what is the face value? Face value is rupees 100 and premium is rupees 5%. It is 5%. Sorry, it is 5%. So it will be rupees 5. Okay. So what will be the issue price? The issue price will be rupees 105. Okay. So 105. So what will be the number of debentures? 3,15,000 divided by 105. Okay. So it will be 3,000 debentures. Okay. So the answer is 3,000 debentures. Okay. So now you can copy this. Okay, you write this part also. Okay, you write this part also, so that students, those who are still confused, you'll be clear with this part. Okay, that we don't have to take the net assets, we have to take the purchase consideration. You pause the video and you can note this down if you want. Okay, I hope this is clear now. Now let's see question number 196. Okay, debentures. Okay. When debentures are issued at premium with the term of redeeming them at par. Okay, when debentures are issued at premium with the term of redeeming them at par, the amount of premium received at the time of issue will be what? It will be credited to securities premium account. Okay, so the answer for question number 196 is securities premium account. Okay, what's happening? Debentures are issued at par. See, sorry, issued at premium. Okay, in premium means we are getting more. Okay, we are getting more and it is redeemed at par. Okay, we will pay them at par. Say for example, if the face value is 100, if the face value is 100, we are receiving 105. Okay, so we are receiving rupees 5 extra. So where will this rupees 5 go? It will go to securities premium account. Okay, now let's see question number 197. Question number 197. X Limited took over assets of rupees 3 lakhs and liabilities of 10,000 from Y Limited company for an agreed purchase consideration of 270. See, again purchase consideration has been given 270. Okay, to be satisfied by issuing 15% debentures of 100 each at a premium of 20%. Okay, find out the amount with which securities premium account will be credited. Okay, basically they are receiving how much? 20% extra basically. Okay, so let's try to solve this answer by passing a journal entry. Okay, by passing a journal entry. So what will be the journal entry? They are taking assets of how much? They are taking assets of 3 lakhs assets, okay, they are taking the assets, so the value of assets is increasing, so we will debit, okay. And they are taking liabilities of how much? They are taking liabilities of 10,000, okay, 10,000 rupees, 10,000, okay. So they are taking liabilities of 10,000. Liabilities will have credit balance, okay. Now from whom? Y Limited, okay. So Y Limited account will also be credited, okay, because the purchase consideration is how much? 270. So we have to pay them 270 rupees, okay. We have to pay them 270 rupees, okay. So now let's see, 270 plus 100, okay. So this is the journal entry. Now what will be the difference amount? Where will it go? See, the debit side is 3 lakhs and the credit side is 280, okay. So which means, what is the net assets? Let's first find the net assets is 290. Now the net assets is 290, okay. Assets minus liabilities is 290, okay. We should ideally pay 290, but how much we are paying? We are paying 270, okay. So where will the difference go? The difference will go to capital reserve account, okay. The difference will go to capital reserve account. How much? Capital liabilities is of 10,000, we are paying 270, okay. So 20,000 will go to the capital reserve account, okay. Now see, we should pay 290, but we are paying 270, we are paying less, so it is a gain for us, right? So it will go to capital reserve account, okay. If amount to be paid was 270 and we had paid 290, okay, we had paid something extra, so it will go to the goodwill, okay. It will go to the goodwill. So this is the journal entry which we will pass, okay. Just copy this, I will rub this, okay. Now see what will be the next journal entry, okay. So now we have to pay the debentures to Y Limited company, okay. So Y Limited company's account will be debited with 270, okay. Now we are issuing how much? We are issuing 15% debentures, 15% debentures, okay. Now we'll have to calculate what number of debentures, okay. This is purchase consideration other than cash. So amount payable is 270 and we are issuing it at premium of 20%, okay. So we are basically issuing it at 120. How 120? Face value is 100, premium is 20%, okay. Premium is 20, sorry, it is 1000. The debenture value is, the face value is 1000, sorry, okay. So it was hidden. So premium will be 200, so the total amount will be 1200, okay. So the amount payable is 270 and the issue price is 1200, okay. So what will be the number of debentures? 225, okay, 225. So how much will go to the debentures account? 225 into face value 1000 rupees, okay. So how much will go? 2,25,000 will go, okay. See, we had to pay 270, but we will pay in future 2,25,000 only, okay. So the difference will go to securities premium account, okay. What will be the difference? 45,000, okay. Don't be confused with capital reserve and securities premium, okay. Capital reserve will come when you purchase something, okay, the difference amount. If you have to pay less, it will go to capital reserve. But in case of issue of debentures or issue of premium, okay, if you have to, say for example, you have to pay more and you are paying less in future, so the difference will go to securities premium account, okay. So this is the answer for question number 198, okay. So the amount transferred to securities premium account will be 45,000, okay. Now see question number 198. When debentures are issued at par and redeemed at premium, the loss on such an issue is debited to, okay. So now before moving to this question, let me just explain something, okay. I'll explain a few things, then we'll move forward with the question, okay. Now let's have a brief discussion on one thing, okay. I want to explain few things before moving further with the questions. Now see, let's take one example of a question, okay. 10,000 debentures issued at rupees 100, okay. Face value is rupees 100, okay. Now let's say issued at 95, okay, at the discount. Face value is 100, okay. To be redeemed redeemed means to be paid back, okay, to be redeemed after 5 years at rupees 105. Okay, so see what's happening. We are issuing it at rupees 5, right? Rupees 95. So the cost of one debenture, the face value is 100. Okay, so we are issuing it at rupees 95. Basically, issue means we are getting money. Okay, so ideally we should receive 100 rupees per debenture, but we are receiving 95. Okay, so we are giving a discount of rupees 5. Okay, we are giving a discount of rupees 5. Now if we are giving a discount, that means it is a loss for us, okay, and it's a gain for the debenture holder. Okay, now we will not talk from the point of view of debenture holder, we will talk from the point of view of the company. Okay, now see what is the loss on issue of debenture. In this case the loss is rupees 5 per debenture, rupees 5 per debenture. Okay, now loss on issue is rupees 5 per debenture. Now we are paying 105. Okay, after 5 years we will be paying 105 per debenture. Okay, the cost, the face value is 100. Okay, we should pay 100, but we are paying 105, which means we are paying rupees 5 extra. Okay, now again when we pay rupees 5 extra, it is a loss for us, loss for the company, and gain for the debenture holder. Okay, so what is the loss on redemption? The loss is rupees again 5 per debenture. Okay, so what is the total loss? The total loss is rupees 10 per debenture. Okay, the loss is rupees 10 per debenture. Okay, so this loss is a loss on issue of debenture. Okay, now say for example, again another example, say for example we have issued it at 95 and we are redeeming it at rupees 100. Okay, now there is only a loss of rupees 5 in this case. In the second case there is only a loss of rupees 5. Okay, so this will be called as discount on issue of debentures. Okay, now first case was 105. Okay, so what will be the journal entry? Let's see. Okay, what will be the journal entry for the first case? Okay, first case, let me write it here. Case number 1, what will be the journal entry? Okay, we are receiving money, bank account debit to debenture application and allotment account. Okay, so how much we are receiving? We are receiving 10,000 into 95. Okay, so we are receiving 9,50,000, right? We are receiving 9,50,000. Okay, 9,50,000. Now what will be the next entry? Debenture application and allotment account debit to debenture account. Okay, so now here 9,50,000 will come. Here how much will come? I have told you always face value. Okay, so what's the face value? 100 rupees. Okay, so the face value is 100. So see, we have received 9,50,000, but we'll be paying back 10 lakhs. Okay, so what is this difference? This difference is on of rupees 5 is for loss. Okay, we have a difference of 50,000. Okay, so this will be discount on issue of debentures. Okay, this will be discount on issue of debentures. Now see, one problem is when we issue this debenture. Okay, say for example we have issued it here 1 2 3 4 5, 1 year, 2 3 4 5. Okay, after 5 years we will repay the debenture. Okay, after 5 years we will repay the debenture, but on issue, okay, on issue I know that I will have to pay something extra after 5 years, because it will be written in the debenture certificate. Okay, that it will be redeemed at rupees 105. Okay, now see, when I issue these shares, okay, when I issue the debentures, I knew that after 5 years I'll have to pay rupees 5 extra. Okay, now do I know the loss of the loss which I will incur after 5 years? Do I know it now only? Yes, I know it now only. Okay, so there is a concept in accounting which says that anticipated losses can be taken into account in the current year only. Okay, so the loss of future years we can record it in the we can take into account in the current year only. Okay, we can take it into account in the current year only. Okay, so now what is the total loss? The total loss will be rupees 10 per debenture. Okay, so now I cannot say this is discount on issue. Okay, what will I say? I will say there is a loss on issue of debenture account. Okay, so what will be the amount? The amount will be 10,000 into 10. Okay, So what is the amount? 10,000 into 10. The total loss is 10. Okay, and the debenture is, number of debenture is 10,000. Okay, so what is the total loss? 1 lakh. 1 lakh. 1 lakh. Okay, now see, there is a difference. The total is 10 lakh 50 and this total is 10 lakh. Okay, so this is not correct, right? This should also be 10 lakh 50. Okay, so what will be the journal entry which will come? The next entry. Okay, let's see how will we do this. The difference of 50,000 will be transferred to premium on redemption of debenture account. Okay, 50,000. I hope this is clear to you. Okay, so see, the total loss is 1 lakh. Okay, the total loss is 1 lakh on issue. Okay, now what will happen? After 5 years, you will have to pay 10 lakh rupees for the debenture and you have to pay 50,000 rupees extra for the premium. Okay, how did I get this? 10,000 into 5, 50,000. See, the premium amount was 5 na. I was paying back 105, but the face value is rupees 100. Okay, so 5 I am paying it extra. Now see, this is a payment. This is the payment which I will make in the future. Okay, now see, the total liability of the firm to be paid will be 10 lakh and 50,000. Okay, so the total amount which they will pay after 5 years is 10 lakh 50,000. Okay, now on issue there is a loss of rupees 5 into 10,000, 50,000, and on redemption, okay, after 5 years I will incur a loss of 10,000 into 5, 50,000. Okay, so the total loss will be 1 lakh. Okay, this loss I know in the current year only when I issue the debenture. Okay, now what will happen? This loss, will it be transferred to the profit and loss account in the first year only? Okay, can I debit this profit and loss account to loss on issue of debentures? Can I debit the whole amount? Okay, this can be securities premium account also. Okay, can I debit this whole amount? No, I will not debit it. I will not debit the whole amount. What I will do is, this 1 lakh, okay, I will divide it by 5 and each year I will write off 20,000. Write off means I will reduce the balance of loss on issue of debentures by 20,000 every year. Okay, because the tenure, okay, of this debenture is 5 years. Okay, so the loss I will debit it in the P&L account equally for 5 years. Okay, so this is how it has to be done. I hope this is clear. Now let's see, let's move to question number 198. Okay, what's the question saying? Let's read it again. When debentures are issued at par, okay, and redeemable at premium, the loss on such an issue is debited to, okay, where is it debited? Issued at par. Okay, say for example 100 rupees and I am redeeming it at rupees 105. Okay, so where will it go? Will it go to securities premium account? No, right? I am giving, right? I am giving something extra. Okay, so where will it go? It will go to loss on issue of debentures account. Okay, so the answer for 198 will be C. See how we have done? We have debited now loss on issue of debentures. Okay, so it will be debited to loss on issue of debentures account. Okay, I hope this is clear. Now see 199. When debentures are issued at a discount and redeemable at premium, okay, the loss on such an issue is debited to, okay, now again if the face value is 100, I am issuing it at discount, say for example at 95. Okay, there is a loss of rupees 5 and I am redeeming it at a premium, say for example I am redeeming it at 105. Okay, so again there is a loss of rupees 5. Okay, so the total loss is 10. Okay, so where will this go? This will again go to loss on issue of debentures account. Okay, so again the answer is C. Now question number 200. Okay, when debentures are issued at a discount and redeemable at par, the loss on such an issue is debited to. Now see, what is the issue? We issued it at 95 and we are redeeming it at 100. Okay, so if the face value is 100, okay, we are redeeming it at 100 only. Okay, so there is a loss of only 5 rupees, right? And that too at the time of issue. Okay, so this loss relates to the current year only. This loss relates to the current year only, because after the maturity, say for example we have to pay back after 5 years. After 5 years we are paying it at par. Okay, how much we should pay? We are paying that much amount only. Okay, so rupees 5 is loss for the current year. Okay, so rupees 5 will be debited to the P&L account in the current year only. Okay, so what will this be called? This will be called as discount on issue of debentures. Okay, discount on issue of debentures. So the answer for question number 200 is D. Okay, now don't be confused. Okay, don't be confused. When will we debit to discount on issue and when will we debit loss on issue? Okay, now see, let me take some question again. Okay, if 1000 debentures are issued debentures are issued at 95, okay, face value is 100, and redemption value is rupees 100, okay. See, 95 is the discount, 95 is the issue price, okay, and face value is 100. We are paying back at par only, okay. So there is a loss of how much? There is a loss of rupees 5, okay, rupees 5. Now this loss will be called as discount. This loss will be called as discount because this loss is incurred in the year of issue only, okay. So this loss will be for the current year only. We will not do it, we will not divide it by 5 and debit each amount for 5 years, because this loss relates to the current year only, okay. Now when will we transfer this to loss on issue, okay. So this 5 rupees, where will it be transferred? It will be transferred to discount on issue of debentures account, okay. I hope this is clear. Now next, okay, if 1000 debentures are issued at 95, face value is 100 and the redemption value is 105. Now see, there is a loss on issue and there is a loss on redemption, okay. So there is a loss on issue rupees 5 and redemption rupees 5, total loss is 10, okay. So this issue relates to the current year and this redemption will be in the future years, okay, future years, okay. So this loss relates to the current year and the future year only, okay. In this case we will transfer it to loss on issue of debentures account and it will be divided by the number of years, okay, and equal amount will be transferred to the P&L account. We will write off equal amounts every year, okay. So I hope this is clear. So now let's see question number 201. When debentures are issued at a premium, okay, and redeemable at par, the gain on such an issue is credited to, where will it be credited? It will be credited to securities premium account, okay. Now if the face value is 100, we are issuing it at premium, okay. If we are issuing it at rupees 105, so we are getting more, right? Money is coming in, we are getting more, okay, and we are paying redemption at 100 only, okay. So we should pay 100 and in future after the expiry of the maturity period we are paying it at 100 only, okay. So there is a gain of 5 at the time of issue, okay. So the gain will be transferred to securities premium account, okay. I hope this is absolutely clear. Now let's see question number 202. Excess value of net assets over purchase consideration at the time of purchase of debentures is credited to, okay, excess value of net assets, okay. Now if the net assets, if the value is 1 lakh, okay, purchase consideration is 80,000. Basically the question is saying excess value of net assets, okay. Excess value, what is the excess value of net assets over purchase consideration? It is 20,000 in this case, okay. Over purchase consideration at the time of purchase of debenture is credited to, okay. See, we had purchased net assets of 1 lakh, but we are paying only 80,000, so there is a gain of 20,000, okay. So where will this gain go? It will go to the capital reserve account, okay. Don't be confused with reserve capital, okay. It will go to capital reserve account. The answer for question number 202 will be B, okay. Now if the net assets, the value of net assets is 80,000 and we are paying 1 lakh, so there is a loss of 20,000. So where will this loss go? This will go to the goodwill account, okay. We are paying more. Why are we paying more? It will be considered as goodwill, okay. The balance will go to the goodwill account. Now let's see question number 203. Premium received on issue of debentures may be utilized for writing off, okay, may be utilized for writing off. Now there is a rule, okay, of utilizing premium received on issue of debenture. Basically they are talking about securities premium account, okay. The question is talking about securities premium account, okay. Now you have to remember this, okay. Can we use this premium for writing off premium allowed on redemption of debentures? Redemption means this is a loss, right? We are paying more, okay. Can we write off this loss? Yes, okay. Preliminary expenses? Yes. Discount allowed on issue of shares? Yes, okay. So the answer will be all of the above, okay. So the answer will be all of the above. Now how you will do? You will go to Google, okay. You will go to Google, okay, and you will search rules for utilization of securities premium account, okay. You go to Google, you search this rules for utilization of securities premium account. You will get 3-4 ways, 3-4 place items where you can utilize the securities premium account. You read it twice, you will remember, okay. Now let's see question number 204, Okay, 204. A company can issue debentures. Okay, company can issue debentures for cash, yes. As a collateral securities, yes. For consideration other than cash, yes. Any of the above. Okay, so the answer for this is any of the above. Now see collateral securities again, right? We have this collateral securities. Now let me explain what is this collateral securities. Okay, let me explain what is this collateral securities, because many students, what they used to do is they will leave this concept. Okay, they will leave this concept. Teachers will say it's not important, but for our current exam, okay, the exam which we will be giving, it's very important for the exam point of view. Okay, and it's very easy. We will try to understand. Okay, so collateral securities. Okay, let's try to understand what is collateral securities. Now see, collateral securities will be called as additional securities. Additional securities. Okay, now what is this collateral securities? Let's see. Okay, so for example, there is a company called ABC Limited. ABC Limited. Okay, the company is in need of 1 CR. Okay, the company goes to a bank. Okay, let's say SBI. The company goes to the bank and asks for rupees 1 crore. Okay, the company asks for rupees 1 crore. Now this 1 crore is a huge amount, right, for the bank also. Now will the bank give ABC Limited the loan of 1 crore without having any securities? No, right? What will the bank say? The bank will say, we are giving you 1 crore rupees, but you have to keep some mortgage. You have to keep some security in case of default. Okay, if you default in paying 1 crore rupees, we will sell your security, we will sell your assets, and we will recover the amount. Okay, basically they will say as that. Now what will happen in this case? Let's try to understand. Bank has given them, okay, SBI gives rupees 1 CR loan to ABC Limited. Okay, now number 2, SBI will ask ABC Limited to what? Give some security. Okay, now ABC Limited will keep the valuable assets like land, building, machinery as security. Okay, they will keep some valuable assets like land, building, machinery as security. Okay, so what will happen now? The bank will give them 1 CR, and okay, the company will keep some mortgage. Okay, examples are land, building, or machinery. Basically the items which cannot move. Okay, the non-movable items, the non-movable assets will be kept as mortgage. Okay, now if ABC Limited defaults, if they did not pay the loan, what will the bank do? The bank will sell off these assets and they will recover their amount. Okay, now see what will happen in case of collateral securities. This securities, land, building, machinery, this will be called as primary securities. It will be called as primary securities. Okay, it will be called as primary securities. Okay, primary securities. Now say for example, the value of the building, is also 1 CR. Okay, the value of the building is also 1 CR. Okay, now the transaction is very risky for the bank. Okay, just try to understand. This is ABC Limited, this is bank. Okay, the bank gives a loan of 1 CR. Okay, and ABC Limited gives land worth rupees 1 CR. Okay, now the value of this land can go down anytime. Now say for example, the company defaults. Okay, the company did not pay the loan on time. Okay, they did not pay the loan, and when the bank goes to sell this building, okay, to sell the building, the value of the building came down to 80 lakhs. Okay, came down to 80 lakhs. Now it is very risky for the bank, right? In this case they will have a loss of 20 lakhs. Okay, because they had given 1 CR as a loan, and they will be able to recover only 80 lakhs by selling of the assets. Okay, so it's very risky for the bank. Now what will the bank say? The bank will ask the company to give some collateral securities. Okay, so now the company, okay, ABC Limited will issue debentures as collateral security. Okay, this will be called as secondary or additional security. additional security. Okay, I hope this is clear. Now let's say the company issues 20 lakhs of debentures as collateral securities. Okay, now what will happen? Okay, by doing this, the company will what? The company will create their liability. They will create the liability in favor of the bank. Okay, now say for example it is 12% debentures. Okay, 20 lakhs. Okay, now they will credit this 12% debentures and they will create their liability. Okay, now what will happen? Say for example the company defaults. Okay, the company ABC Limited has defaulted in paying the loan. The bank will have a proof that the company has issued 12% debentures as collateral securities in favor of the bank. Okay, so when the company issues 12% debentures, what will happen? The company will give a debenture certificate. Okay, which will say it is issued as a collateral security. Okay, this will be given to the bank. Okay, this will be given to the bank. Now if the company defaults, what will the bank do? The bank will go to the court. Okay, the bank will go to the court. The bank will say, see sir, I have this debenture certificate issued by the company as a collateral securities, okay, of 20 lakhs. Okay, I had given a loan of 1 crore to the bank, to the company, and the assets, after I sold the assets, I could get only 80 lakhs. Now 20 lakhs is to be received from the company. Okay, now the court will analyze all the things and the court will order ABC Limited to pay these 20 lakhs. Okay, I hope this is clear, right? Now there are two ways to treat the collateral securities. Okay, ways to treat the collateral securities. Okay, debentures issued as collateral securities. The first one is no entry. The first treatment is no entry in the books of the company. Okay, only disclosures will be made. Okay, the company will only disclose that it has issued debentures as a collateral securities. Okay, now they have taken a loan of 1 CR. What will be the journal entry from the point of view of the bank? Money is coming in, bank account will be debited, and bank loan account will be credited with 1 CR. Okay, this is the journal entry they will pass. Okay, now in the first case, will they pass any journal entry for the issue of debentures as collateral securities? No. Okay, they will not pass any journal entry. Now when the company makes their balance sheet, okay, when the companies make their balance sheet, this will be equity and liabilities. Okay, so here the company has taken a loan. Now there is a liability of 1 crore. Okay, so they will show the liability of 1 CR. Okay, here they will disclose, okay, secured by issue of, say for example 12% debentures. Okay, the number will be mentioned, 20,000, 12% debentures of rupees 100 each as a collateral security. Okay, there will be just a disclosure. Okay, there will be just a disclosure. Okay, there will be just a disclosure that the company has taken this loan of 1 CR from the bank. Okay, and the company has issued, debentures. Okay, and they have made the disclosure. Okay, this is the first entry which they will, this is the first treatment which they will do. Okay, the first way to treat the collateral securities. Okay, now what will happen by this disclosure? The users of the financial statement, okay, the shareholders, okay, the members of the company, the lenders of the company, they will get to know that the company has taken a loan of 1 CR and it has issued collateral security. Okay, this is the first way to treat. Okay, and what is the second way to treat? The second way to treat the collateral securities is making the entry. Okay, so what will be the first journal entry? Bank money will come in, bank account debit to bank loan account. Okay, so what will be the amount of loan? 1 CR. Right, now the second entry which they will pass is they will show the debentures which they have issued. Okay, 12% debentures has been issued, right? So they will make the entry for this. Okay, so to make the entry for this, what they'll have to do, they'll have to credit debentures account, right? They are making a liability. Liability will always have credit balance. Okay, so what will happen to 12% debenture account? Okay, how much? 20 lakhs. Okay, now what will they debit? Okay, now when a company issues debenture, they receive money, right? But in this case, they are not receiving any money, right? They are just what? They are just issuing debentures as a collateral securities in favor of the bank. Okay, now what will be debited? Debenture suspense account. Debenture suspense account will be debited with 20 lakh rupees. Okay, this is just a way to treat the collaterals. The second way to treat the debentures issued as collateral securities. Okay, now this entry, this suspense account, okay, this suspense account has to be closed, okay, after some time. Okay, now when will this debenture suspense account be closed? After the bank has repaid the loan. Okay, this debenture they have issued just for the security purpose as a collateral security. Okay, so this account will be closed once the bank repays the, once the company repays the loan to the bank. Okay, so now what will be the journal entry on repayment? After repayment of loan. Okay, after repayment of loan, what will be the journal entry? This second entry will be reversed. Okay, now what will happen? We have shown our liability, right? 12 lakhs, 20 lakhs. Now the bank has the company has taken loan of 1 CR and the company has paid the loan in due course. Okay, they have paid the loan correctly and they have paid the whole amount. Now what will happen? This account will, this entry will be reversed. Okay, now this liability will be gone. Now to finish a liability, what will I have to do? I'll have to debit, right? So I will debit 12% debentures account, 20 lakhs. Okay, and I will credit debenture suspense account with 20 lakhs. Okay, so this is the treatment of debentures issued as collateral securities. Okay, I hope this is clear. So simple, no? See, we hardly take 10 minutes to explain. Okay, so teachers used to skip, not teachers, students used to skip. Okay, they used to say it's not important and they used to skip this concept. Okay, it's very easy. Now let's see the treatment in the balance sheet. Okay, what will be the treatment in the balance sheet? Now see, they have issued this debenture. Okay, so the issue of debentures will be taken into the balance sheet again. Okay, so see here again, equity and liabilities will come. So here bank loan will come, bank loan of 1 CR. Here they will say 12% debentures. Okay, 20 lakhs. Again they will say issued as a collateral security. Okay, 20 lakhs. So 1 CR. Okay, now in case in the asset side, what will happen? In the asset side, cash and cash equivalents, 1 CR. We have taken a loan, bank has increased, right? 1 CR. And other, in under the head other known current assets, they will show debenture suspense account of 20 lakhs. Okay, this way our balance sheet will be tallied. Okay, so this is the treatment of debenture issued as collateral securities. Simple and easy. Okay, if you want, you can pause the video and take the note this down if you want to. Okay, now let's see question 205. When the number of debentures applied is less than number of debentures offered to public, the issue is said to be, okay, when the debentures applied by the public is less, okay, less than the number of debentures offered by the company. The company is offering more, but the public is asking for less numbers. Okay, so what will this be called? This will be called as under subscribed. Okay, it will be called as under subscribed. So the answer for question number 205 is under subscribed. Okay, now let's see question number 206. Maximum limit on premium on issue of debentures is, what is the maximum limit? 5%, 10%, 15%, no limit. What will be the maximum limit? The answer will be no limit. Okay, there is no limit on issue of premium, issue of debentures on premium. Okay, issue of shares also there is no limit, and in case of debentures also there is no limit on issue of debentures at premium. Okay, the company can issue at whatever price they want. Okay, say for example face value is 100, the company can issue it for 150, the company can issue it for 200, okay, or more than 200 also. Okay, so there is no limit. So what is the answer for question number 206? The answer will be D, no limit. Okay, now let's see question number 207. Debentures that do not carry any charge or security on assets of the company are known as, okay, debentures that do not carry any charge or security on assets of a company are known as, what will it be called? It will be called as unsecured debentures. Okay, it will be called as unsecured, means it is not secured by any assets. Okay, now what do you mean by security? That do not carry any security means the company has issued debentures but it has not taken any, the debenture holders have not taken any security from the company. Okay, basically it means that. So the answer for 207 will be unsecured debentures. 208, debenture is, what is a debenture? A written instrument acknowledging a debt written by its holders. Okay, is it a document acknowledging a debt by its holder? Okay, an oral acknowledgement of debt by a company, is this a oral? No. Okay, I've told you it should be in written. Point number C, a written instrument acknowledging a debt written by the company, none of this. Okay, so there is a confusion between A and B. Okay, will it be a instrument acknowledging debt by its holder or a company? Okay, so who used to give debenture certificate? Company used to give debenture certificate to the debenture holder. Okay, so what will be the answer for question number 208? The answer will be C. Okay, so a written instrument acknowledging a debt written by the company. Now who is acknowledging a debt? The company is acknowledging debt by saying that we have issued debenture certificate to the debenture holder and we are liable to give, we are liable to pay back the money in future. Okay, so the answer for 208 will be C. Now 209, interest on debentures is calculated on, okay, interest on debentures is calculated on face value, issue price, its book value, cost price. Okay, what will be the answer for this? The answer for this will be A. Okay, face value. Okay, so interest is always calculated on the face value of the debentures. Okay, its face value. So if the face value is, say for example 100, issue price is rupees 105. Okay, so interest will always be calculated on the face value. Okay, on the face value of the debentures. Okay, now let's see question number 210. Debentures issued as collateral securities will be dash to the debenture suspense account. Okay, debentures issued as collateral securities will be dash to debenture suspense account. Okay, see, I have explained in detail now what will be the journal entry. It will be debited to the debenture suspense account. See, it will be debited to the debenture suspense account. Okay, so what will be the answer for 210? It will be debited. Okay, debentures issued as collateral securities will be debited to the debenture suspense account. 211, collateral security means dash security. What is it? Is it a primary? No. Is it a government? No. It is a valuable? No. Okay, so what is the answer? It is a secondary security. Okay, I have told you. Okay, primary security will be land. In an example, then building will be the primary security, and what will be the secondary security? Debentures, right? So collateral security is always secondary security. Now let's see 212. Question number 212. Okay, so what's the question saying? 10% debentures issued at 105 is repayable at 110. Okay, so what is the issue price? The issue price is 105. What is the redemption price? Redemption value is 110. Okay, what is the redemption price? It is 110. Face value is 100. Face value is 100. Calculate the amount of loss on redemption of debentures. Okay, we have to calculate the loss on the redemption of debentures. See, read this very carefully. Okay, question is not saying issue on debentures. The question is saying redemption of debentures. Okay, so the face value is 100. Okay, so we are redeeming it at 110. Okay, so what is the loss? Loss will be rupees 10 per debenture. Okay, so what will be the answer for 212? It will be A. Okay, rupees 10%. If the question had said calculate the amount of loss on issue of debentures, what would have been the loss? It would have been 5. Why 5? Because see, we are issuing it at 105. Okay, we are issuing it at 105. There is a gain of rupees 5, right? And on on redemption there is a loss of 10. Okay, so what is the net loss? 5. Okay, so be very careful when you read the question. Okay, so on redemption means on repayment. Face value is 100. Actually we should pay 100, but we are paying 110. Okay, so the loss is rupees 10 per debenture. Now 213. Question number 213. X Limited took over the assets of 6,60,000. Okay, 6,60,000 and liabilities of rupees 80,000 of B Limited for an agreed purchase consideration of 6 lakhs, payable 10% in cash and the balance by issue of 15% debentures of 100 each at 10% discount. The number of debentures to be issued will be, okay, so let's solve this question. 213. Question number 213. Okay, so what is the value of assets? 6,60,000. Okay, so it has taken assets worth rupees 6,60,000. Now liabilities 80,000. Okay, so liabilities will be reduced. Liabilities, what is the value of liabilities? See, 80,000. Okay, so 80,000 will be minus from here. So what will be the value of net assets? Net assets is 5,80,000. Okay, net assets is 5,80,000. So we had to pay 5,80,000, but how much we are paying? 6 lakhs. See, purchase consideration is 6 lakhs. Okay, net assets, but the purchase consideration is 6 lakhs. Okay, so we are paying 20,000 extra. Now what's the question saying? Payable 10% in cash. Okay, we are paying 10% in cash. Okay, so out of this purchase consideration we are paying cash 10%. Okay, so what is the cash amount? Will be 60,000. Okay, out of this 6 lakhs we are paying 10% in cash. Okay, out of this 6 lakhs we are paying 10% in cash, so we are paying 60,000 in cash. So what is the balance amount? Balance payable will be 5,40,000 rupees. Okay, now let's read the question further. And the balance by issue of 15% debentures of 10 each at a discount of 10. Okay, we have to calculate the number of debentures to be issued. Okay, so the balance is paid by issuing 15% debentures of 100 each at a discount of 10. Okay, so let's see what will be the number of debentures. Okay, so number of debentures will be, we know the formula, amount payable divided by issue price. So what is the amount payable? See, this is the amount payable now. Okay, you don't have to see this. See, 5,80,000. Okay, purchase consideration is how much? We have agreed to pay 6 lakhs, right? Out of this 6 lakhs, 60,000 has been paid immediately. Okay, we have paid cash. Now the balance payable is 5,40,000. Okay, so what will be the amount payable? The amount payable will be 5,40,000. 5,40,000. And what is the issue price? See, we have issued it at a discount of 10%. See, discount of 10%. Okay, so face value is rupees 10, discount of 10%, which means 10 rupees. Okay, so what will be the issue price? Issue price will be 90. Okay, so what will be the number of debentures? Number of debentures will be 5,40,000 divided by 90 will be 6,000 debentures. Okay, 6,000 debentures. So the answer for 213 is 6,000. Okay, now let's see 214. Question number 214. Debenture interest is, okay, debenture interest is, point number A, debenture interest is payable only in case of profits, accumulates in case of losses and inadequate profits, is payable irrespective of profit or loss, none of the above. Right, I have discussed when I discussed the debenture interest, I have told you that debenture interest is payable, right? The company has to pay debenture interest irrespective of whether the company is earning profits or losses. Okay, so payment of debenture interest is mandatory, right? So what will be the right answer for this? The right answer will be C. Okay, debenture interest is payable irrespective of profit or losses. Okay, so the answer for 214 is C. Now let's see question number 215. Which of the following statement is true? Okay, we have to find out the correct statement. Okay, we have to find out the correct statement. Statement number A, a debenture holder is the owner of a company. Is debenture holder owner of a company? No, they are lenders of the company, lenders or creditors of the company. Okay, so this statement is not correct. We have to find out the correct statement. Okay, statement number B, a debenture holder can get his money back only on the liquidation of the company. Liquidation of the company means when the company comes to an end. Okay, company comes to an end. Is this statement true? No, right? When will they be paid back? When the maturity period has occurred. Okay, if the debenture has been issued for 5 years, so they will be paid after 5 years. Okay, so this statement is also not correct. Statement number C, a debenture issued at a premium can be redeemed at a premium. Okay, is this statement correct? Yes, right? We can issue debentures at premium and we can redeem it at premium. Okay, we can issue debentures at premium and we can redeem, we can repay it at premium. We cannot repay it at discount. Okay, so premium is allowed. Okay, so point number C is correct statement. Point number D, a debenture holder receives interest only in the events of profits. Right, this statement is also not correct. Okay, so this is false, this is true, and this is also false. Okay, debenture holder will get profit interest irrespective of profits. Okay, even if there is loss, you will get profits. Okay, so what will be the answer for question number 215? The answer will be C. Okay, a debenture holder, a debentures issued at a premium can be redeemed at a premium. Okay, so the answer for 215 is point number C. Question number 216. Which of the following statement is false? Now we have to find out the incorrect statement. Okay, let's see. Statement number A, debenture is written instrument acknowledging a debt under the common seal of a company. Is this correct? Yes, this is a correct statement, right? It will be a written document, okay, given by the company under the common seal of a company. Okay, the seal of the seal and signature of the seal of the company will be there, and the signature of the person signing the debenture certificate will be there. Okay, point number B, debenture is a part of owned capital. Is this correct? Debenture is a part of owned capital. Owned capital means owner. Okay, is it a part of owner's capital? No, right? Debentures are not the owner of a company, right? So this statement is false. A is true, B is false. Okay, now see point number C. Point number C, the payment of interest on debentures is a charge on the profits of a company. Okay, is this statement correct? Is this statement correct? The payment of interest on debenture is a charge on the profits of the company, right? So this statement is also true. Okay, this statement is also true. It is a charge on the profits of the company. I have told you now, debenture interest will be paid to the debenture holders. It is mandatory and it will go to the profit and loss account. Okay, charge means when we take it to the profit and loss account. Now give me an answer for this. Dividend paid to a shareholder, is it a charge on profits of a company? No, it is a appropriation of the profit. Okay, I'll discuss this point. Okay, very important point. Before that, let's see point number D. Redeemable debentures are those debentures which are payable on the expiry of a specific period. Right, I've told you debentures will be issued for a specific period, the maturity period. After that we will pay it back. Okay, so this statement is also true. Okay, so what is the false statement? B, right? See, B is the answer for question number 216. Okay, B is the answer for question number 216. We have to find out the incorrect statement. Okay, so the incorrect statement is point number B. Debenture is a part of owned capital. Okay, now let me quickly explain charge and appropriation. Okay, so interest. Okay, see, interest. This interest will go to the profit and loss account of the company. Okay, so we have to debit this interest to the P&L account. Okay, when we prepare P&L account, this interest will be called as finance expense. Finance expense, debenture interest. Okay, so it will go to the P&L account. Okay, now you earned a profit. Okay, we call it profit after tax. Okay, this is after payment of tax. Now this profit, from this profit the shareholders will get their dividend. Okay, so from this profit they will get the dividend. Okay, so this debenture interest taking to the P&L account will be called as charge to the profit and loss account. Okay, and dividend which the shareholders will receive is a appropriation. Okay, we have earned a profit. Okay, from this profit now we will distribute dividend, so it will be called as appropriation. Okay, I hope this is clear. Now let's come to question number 217. Debenture premium cannot be used to, right? I have told you This is basically about securities premium account. After all, you go to Google and you search how to use securities premium account. Okay, where can we utilize securities premium account? Can we utilize it to write off the discount on issue of shares or debentures? Yes, we can use this. Okay, so basically we have to find which areas where we cannot use the debenture premium. Okay, basically they are talking about securities premium. Point number B, write off the premium on redemption of shares or debentures. Can we use? Yes, we can use it. Okay, pay dividends? No, we cannot pay dividends from the securities premium account. Write off capital loss. Can we write off capital loss? Yes. Okay, what is a capital loss? Say for example, you have a land. Okay, you sell off the lands for in a loss. Okay, so this kind of capital loss can be written off. Okay, now this, the discount on issue of debentures, discount on issue, loss on issue of debentures. Okay, these are a kind of capital loss. Okay, so securities premium account can be used to write off this kind of losses. Okay, so what will be the answer for 217? The answer will be pay dividends. Okay, debenture premium cannot be used to pay dividends. Okay, dividends will be paid out of P&L account. Okay, or general reserve. Okay, these two accounts are free reserves. Okay, P&L means you have earned profits, right? Now when will we make general reserve? When we want to keep some money, some profits aside. Okay, then we will transfer it to general reserve. So profits will only be paid from the free reserves. Okay, the actual profits. Okay, so I hope this is clear. Now 218, which of the following statement is false? Okay, we have to find out the false statement. Okay, point number A, at maturity means after the expiry of the period, okay, for which debentures were issued, debenture holder gets back their money as per the terms and condition of the redemption, right? Yes, this statement is true, right? Because the debenture holder will get back their money as per the terms and conditions of the issue. Okay, when they issue debentures, there will be terms and conditions. When will it be paid back, at how much it will be paid back. Okay, so it will be as per terms and conditions. Point number B, debentures can be forfeited for non-payment of call money. Okay, point number C, I have some doubt with this. Okay, I'll have to explain. In company's balance sheet, debentures are shown under secured loans. Okay, it is shown under secured loans. Okay, yes. Now debentures are issued. Okay, so if question is silent, we will assume it to be a secured loans. Okay, secured debentures. This statement is also true. Point number D, interest on debenture is a charge against profit. Yes, we have discussed this, right? Interest on debenture is a charge. It will be taken to the P&L account. Now point number D. Point number B, sorry. Debentures can be forfeited for non-payment of call money. Is this true? No, this is false. Okay, you have to remember, write down somewhere. Debentures can never be forfeited. Okay, it cannot be cancelled. Only shares will be cancelled for non-payment. Okay, debentures will not be cancelled. So the answer for 218 is debentures can be forfeited for non-payment of call. This is the false statement. Okay, now come to point number C. I want to have a discussion on this point number C. In company's balance sheet, debentures are shown under secured loans. Okay, now debentures, basically it is a secured, or kind of secured loan, right? You will receive what? Debenture. Company will receive debentures. Okay, so if question is silent, we will always assume it to be a secured debentures. Okay, now 219. Now I'll come back to this. Okay, I will have to discuss this in brief. Okay, I'll skip this question. 220, which of the following is false with respect to debentures? Okay, now we have to find out the incorrect statement with respect to debentures. They can be issued for cash. Is this statement false? No, this is true. Okay, this is true. This is true. They can be issued for consideration other than cash. Yes, this is also true. They can be issued as collateral securities. Yes, this is also true. They can be issued in lieu of dividends. Is this correct? False. Okay, in lieu means in return. Okay, so debentures will always be issued in return of interest. Okay, they will never be issued in return of dividends. Okay, so what is the false statement? The false statement is point number D. The false statement, point number D. They can be issued in lieu of dividends. Okay, they will be issued in lieu of interest. Okay, I hope this is clear. Now let's come to question number 21. Which of the following statement is false? Now again we have to find out the incorrect statement. Okay, debentures is a form of public borrowings. Is this a form of public borrowings? Yes, right, we are taking from the public, right? Basically we are taking from a group of people. Okay, they will be called as public. So this statement is true. Point number B, it is customary to prefix debenture with the agreed rate of interest. Now you have seen 12% debentures, 10% debentures, 15% debentures. Now what is this 15%, 12%, 10%? This denotes the rate of interest. Okay, so it is customary. Okay, now how will we know how much debenture, how much interest it is bearing? So in before debenture, the rate of interest will always be written. Okay, so it is customary practice. Okay, is this statement true? Yes. Okay, it is customary to prefix debentures with the agreed rate of interest. Point number C, debenture interest is a charge against profit. Yes, this statement is also true. Now point number D, the issue price and redemption value of debentures cannot differ. Okay, basically means if the issue price is 100, okay, the redemption price cannot be 105. Is this true? No, right? It can be, right? So this is the fourth statement. Okay, so what is the answer for 221D? The issue price and redemption value of debentures can differ. Okay, I hope this is clear, simple and easy, right? So this is the answer for 221. Now come to question 222. Discount on issue of debentures is a discount on issue of debentures is a revenue loss to be charged in the year of issue, capital loss to be written off in the year of issue, capital loss to be written off over the tenure of the debentures, capital loss to be shown as goodwill. Discount on issue of debentures, what is this? Right, see, we have discussed here now. Where is that point? See, I have told you here now that the loss on issue, okay, the loss on issue will be divided equally between the tenure. Okay, tenure means the time for which debentures were issued. In our example it was 5 years, right? So it will be divided equally and it will be written off in equal amount, okay, every year for 5 years. Okay, so I guess I have mistaken here. I had one mistake here, okay, wherein I had said the discount of the current year will be written off in the current year only. Okay, so in that case also we'll have to divide by the number of years. Okay, so if there is a loss on issue of debentures, let me just explain it here nicely. I'll explain it again. Okay, so if there is a loss on issue of debentures, when will we have this loss? If the face value is 100 and we have issued it for 95. Okay, so there is a loss of rupees 5 here, right? And again we have repaid this for rupees 105, right? The face value was 100 rupees. We should pay 100, but we pay 105. Okay, so again there is a loss of rupees 5 here, right? So the total loss is rupees 10. Okay, so this kind of loss will be divided equally. Okay, if the loss will be divided equally in the number of years. Okay, say for example if the debenture is issued for 5 years, it will be divided equally between 5 years and it will be written off every year. Okay, so what will be the answer for discount on issue of debentures? Is a capital loss. It is a capital loss to be written off over the tenure of debentures. Okay, so what is the answer for 222? The answer is C, capital loss to be written off over the tenure of debentures. Okay, now students used to be confused with this revenue loss and capital loss. Okay, so what is a revenue loss? What is a revenue loss and capital loss? Okay, be very careful. Okay, discount on issue of debentures is a capital loss. Okay, it relates to the capital, right? Issuing capital, we are raising money, we are raising capital, we are raising funds. Okay, so this kind of loss will always be a capital loss. Again this also I'll skip. Okay, this is related to dividend, debentures, redemption reserve account. Okay, this is a different concept, we'll have to discuss this nicely. Okay, now see question number 2 to 4. Premium on redemption of debenture is generally provided at the time of when do we pay premium on redemption of debentures? Okay, the extra money which we pay on repayment. When do we pay? Issue of debentures. Is it paid during the issue? No. Is it paid during the redemption of debentures? Yes. Is it paid after 10 years? No. Is it written off? No. Okay, so when it is paid at the time of redemption. Okay, when we repay the debentures, we will pay the premium. Okay, very logical answer. The answer for 2 to 4 is B, redemption of debentures. Okay, so now let's see question number 2 to 5. Debentures cannot be redeemed at, okay, par, premium, discount, none of more than 10%. Okay, what is the answer? The answer for this is C, right? I've told you debentures will never be redeemed at a premium. Okay, 2 to 6. A company issued 10,000 12% debentures of 100 each at 10% premium. Okay, 12% stands for, what does this 12% denote? This is the rate of interest. Okay, so the answer for 2 to 6 is C, rate of interest, right? 12% debentures means the debenture holder will get 12% interest rate per annum. Okay, now let's see 2 to 7. Loss on issue of debenture account is shown. Okay, loss on issue of debentures account is shown on the asset side of balance sheet, on the liability side of balance sheet, on credit side of P&L account, on debit side of P&L account, none of the above. Okay, where will loss on issue of debentures be shown? Okay, now I'll have to explain this. Okay, for those students who have doubt in this chapter, I will explain it in brief. Okay, now see loss on issue of debentures. Okay, loss on issue of debentures. We have discussed about loss on issue of debentures in brief now. Loss on issue of debentures. Loss on issue of debentures. Okay, so what is the journal entry which you will pass on loss on issue of debentures? Let's see. We have discussed here. See, loss on issue. Wait, let me just clean this up. Now see, here there is a loss on issue of debentures, right? Loss on issue of debentures 1 lakh rupees. There is a loss of 1 lakh rupees on issue of debentures. Okay, now these debentures, I have told you, it will be written off equally. Okay, this was issued for 5 years, right? In our example, we will pay back the debentures after 5 years. Okay, so this loss on issue of debentures, okay, I have explained that 1 lakh will be divided by 5, and every year we will write off 20,000. Write off means we will reduce the value of debentures, loss on issue of debentures, by 20,000 every year for 5 years. Okay, this way we will finish the loss in a period of 5 years. Okay, now where will we take this to in the balance sheet? Okay, see, loss on issue of debentures, loss on issue of debentures. Where will we take this in the balance sheet? This is in the debit side, right? We all know that assets will always have debit balance. Okay, we always know that assets will always have debit balance. Okay, so we are creating, this is a new item which has come, right, on the issue. This is the loss which has arisen during the issue, so it is in the debit side, so it will go to the balance sheet. Okay, it will go to the asset side of balance sheet. Okay, so this type of assets will be called as fictitious assets. Fictitious assets. Okay, this is not an assets in real, but it has been categorized under the assets. Okay, and every year we will reduce the value by 20,000 for 5 years. Okay, I hope this is clear. So where will this 2 to 7, what will be the answer for 2 to 7? The answer will be on the asset side of balance sheet. Okay, so the answer will be point number A, asset side of balance sheet. Now I have to take up 2 questions. Okay, I have to take up 2 questions, final questions. Okay, now let's see, let's discuss this bearish check. Okay, which of the following is not a characteristics of bearer debenture? Okay, what do you mean by bearer debenture? Now let's see. Bearer debenture. Okay, now we have to understand what is bearer and order. Okay, we have to understand between these two word. Okay, bearer and order, these two terminology. It's very easy, very simple. Okay, now see, let me take an example of negotiable instrument. Okay, now when I say negotiable instrument, NE, okay, negotiable instrument, what are the items which are included in negotiable instrument? Promissory note, we call it P note, bills receivable or bills payable, okay, check, Okay, the bank check is also a negotiable instrument. Okay, what do we mean by negotiable instrument? It can be transferred from one person to another. Okay, now see, in case of debentures, okay, just to make you understand, this is a debenture certificate. Okay, now say for example ABC Limited, okay, ABC Limited has issued me 10,000 debentures. Okay, 10,000 debentures of rupees 10 each. Okay, so I am the debenture holder of 1 lakh rupees. Okay, my name will be written here, Rahul Sharma. Okay, Rahul Sharma, and the director of the company will sign here. Okay, and all the details will be written in the debenture certificate. Okay, now see, when we talk about order and bearer, okay, when we talk about order and bearer, what do we mean by order and bearer? See, now this debenture, in this debenture certificate, whose name is written? Rahul Sharma's name is written. Okay, Rahul Sharma's name is written. Now, if a person named Rohit, goes to the company and says that, see, I am a debenture holder of this, I am the owner of the debentures, okay, and after 5 years you will give me this money, you will not give this to Rahul Sharma. Okay, will the company accept? The company will not accept this, right? Because Rahul Sharma's name is written. So it is clear that who is the owner of the debentures? Rahul Sharma is the owner of the debentures. Okay, excuse me, let me just change my pen. Just a second. Okay, now who is the owner of the debenture? Rahul Sharma is the owner, right? If Rohit goes to the company and says, I am the owner of the debenture, will the company accept? No, the company will not accept, right? The company will not accept. Okay, so this is a order. Okay, this is a order instrument. Okay, means the company will pay the money back to Rahul Sharma only. Okay, now what if nothing was written here? Nothing was written here. Okay, nothing was written here. Now the real owner was Rahul, okay, but nothing was written in the certificate. So what Rahul did, Rahul sold this debenture certificate to the person called Rohit. Okay, Rohit. Now nothing is mentioned here, right? Now in case of bearer instrument, okay, in case of bearer, what will happen? The holder of the certificate, okay, the person who has this certificate, who has this physical certificate, will be the owner of the debentures. Simple. Now in case of order, what was happening? Rahul Sharma's name was written. Okay, Rahul Sharma. Now in order to transfer this, okay, in order to sell these debentures to another person, Rahul Sharma will have to what? He'll have to make a deed. Okay, he'll have to make a transfer deed. Okay, wherein Rahul Sharma will sign, okay, that he will acknowledge that he has sold these debentures to a person called Rohit. Okay, he will have to make a separate deed. Okay, wherein everything will be written. Rahul Sharma will sign as a seller and Rohit will be the buyer. Okay, but in case of order, but in case of bearer, what will happen? Nothing will be mentioned. Okay, so Rahul can sell it to anyone, okay, without making any deed. Okay, so this type of transaction is called as bearer transaction. Okay, now there may be a case where Rahul was the first owner, Rahul sell it to Rohit. Okay, Rohit sell it to a person called Rema. Okay, and Rema sell it to a person called Sanga. Okay, Sanga sell it to a person, lady called Mami. Okay, so now this is a bearer instrument. If this is a bearer instrument, when Rahul sold it to Rohit, he will not have to make any special deed. Okay, he will not make any transfer deed. Again, when Rohit sell it to Rema, he will not have to make any transfer deed. Okay, and so on. But in case of order, what will happen? A separate document will always be made, because this certificate is in the name of Rahul. Now Rahul will have to transfer in the name of Rohit. Okay, now when Rohit sells, he will have to transfer in the name of another person. Okay, so this is how order check goes on. Okay, order instrument goes on. I hope it is clear. Now let's see which of the following is not a characteristics of bearer debenture. Okay, they are treated as negotiable instrument. Okay, are they treated as negotiable instrument? Yes, I have told you negotiable instrument means which can be sold, which can change hands. Okay, it can be sold to any person. Point number B, the transfer requires a deed to transfer. Bearer debenture, this is a bearer debenture. Okay, will they require any deed? No, it is freely transferable. I have told you now, it is freely transferable means we can transfer it to any person, okay, without making a deed if the name is not written. Point number C, they are transferable by mere delivery. Okay, they are transferable by mere delivery. Okay, bearer instrument means you don't have to make any deed. Okay, you don't have to make any deed. You can transfer it by, you have to transfer it by just giving it to the person. Okay, you don't have to make any special deed. So what is this statement? Is this statement correct? Yes. Okay, so B, wait, B, is this statement correct? The transfer requires a deed to transfer? No. Okay, they don't require any deed. It can transfer, we can transfer it freely. Okay, we don't have to make any deed in case of bearer. We'll make deed only in case of order instrument. Okay, point number D, the instrument, the interest on it is paid to the holder irrespective of identity. Okay, we pay interest to the holder irrespective of the identity, even if we don't know the holder, the owner. Okay, whoever has the debenture certificate will get the interest. Okay, so this is also correct. So what is the wrong statement? The wrong statement is B, the transfer requires a deed to transfer. Okay, I hope this is clear. 219. Okay, now we have come to the end of the lecture. Okay, wherein we will discuss one simple easy point, then we will end up this unit. Okay, now let's see question number 223. Okay, what is the question saying? S Limited decided to redeem its 8,000 11% debentures of rupees 100 each at a premium of rupees 10. The minimum amount transferred to DRR account will be, what will be the minimum amount? Okay, now we'll have to understand what is DRR. Okay, debenture redemption reserve. Okay, debenture redemption reserve account. Okay, now what is this? Let's see. Okay, you just write if you want. Okay, this is not so important, I guess, at your level. Okay, this will basically be taught at the higher level, but it is in the question bank, so I'm taking up this topic. Okay, it's better you understand. It's very simple. Okay, just have patience and just watch for 10 more minutes and we will end up with this lecture. Okay, now see, as per section, you don't have to remember this section. Okay, as per section 71 subsection 4 of Companies Act 2013. Okay, every company issuing debentures shall create debenture redemption reserve account. Okay, DRR. Okay, should create debenture redemption reserve. Okay, point number B, DRR shall be created out of profits available for distribution of dividend. Okay, so I have told you what are the profits available for distribution of dividend: profit and loss account, general reserve, right? These are the main two accounts which are available for distribution of dividend. Okay, number 3, DRR shall be utilized only for redemption of debentures. Okay, these are the 3 points. You just note this down if you want. Okay, or you can just listen. Okay, now what is happening? Every company issuing debentures shall create DRR. Every company who is issuing debentures will create DRR. Okay, debenture redemption reserve shall be created out of profits available for distribution of dividend. Okay, basically these are the two profits available for distribution of dividend. DRR shall be utilized only for redemption of debentures. Okay, now what is this DRR? What is this DRR? Let's try to understand. Okay, debenture redemption reserve. Okay, what is this DRR? Okay, now what will happen? Okay, let's see, let's try to understand this. Okay, now every company, okay, who is issuing debentures, will have to make this reserve account. Okay, what will happen in this? Say for example, there are two accounts, you have two wallets. Okay, you have two wallets, let's say you have two what do you call this, okay, place where you keep your profits. Okay, so this first profit will be P&L and general reserve. Okay, now this is an empty box. Okay, this has profits. Okay, in this, now what will happen in the case of DRR, you will take out money from this pocket, this box, and you will keep it in this box. Okay, this will be called as DRR, debenture redemption reserve account. Simple. Out of the available profits from profit and loss or general reserve, you will take out some money. Okay, you will take out some money and you will keep it in the debenture redemption reserve account. Okay, now how much you will keep, we'll try to understand this. Okay, now say for example, A Limited has issued 10,000 8% debentures of ₹100 each. Okay, redeemable at a premium of ₹10. Okay, after 5 years. Okay, now how much you will have to transfer it to the DRR account? Let's see. Okay, how much to be transferred? How much to be transferred is the question. Okay, how much we will transfer? We will transfer 10% of total nominal value of debenture to be redeemed. Okay, how much is the nominal value? See, the face value is 100, right? It will be redeemed at a premium of 10, so it will be redeemed at 110. Okay, so face value is 100. Okay, so we'll have to take this face value. Okay, we'll have to take this face value. Okay, wait, let me write it again. The face value is, let me write it with another pen. The face value is 100, redemption value is 110. Okay, so you'll have to take this face value. Okay, redemption value will not have any relevance when we transfer reserves to DRR reserve account. Okay, so what is the amount, what is the nominal amount? Now when we say nominal account, what will be the nominal amount in this case? 10,000 into 100. Okay, so 10 lakhs, this is the nominal amount in this case. Okay, in this example, how did I find this? Number of shares to be redeemed, this will be redeemed, right, after 5 years, into face value. Simple. Okay, we have to take 10% of this. Okay, so what will be the 10%? It will be 1 lakh. Okay, so what will happen from here? From this box we will take out 1 lakh rupees and transfer it to this box. Okay, so here will be minus, here will be plus. Simple. Okay, now you know how much to transfer. We have to transfer 10% of total nominal value of debentures to be redeemed. Okay, now there is a concept of DRR investment account. I don't think at your level at least this will be important. Okay, this is actually a topic to be covered in the higher studies. Okay, there is a question of DRR, so I'm just taking up this topic. Okay, so we know now how much to be transferred. Okay, now when to transfer, let's see. Okay, when to transfer, question number 2, when to transfer. Okay, when to transfer. Now see, these debentures will be redeemed after how much? After 5 years. Okay, after 5 years. Okay, so on the fourth year, 31st March, okay, at the year end, we will transfer this amount, okay, to debenture redemption reserve account. Okay, I hope this is clear. Now this will be used for only purpose of redemption. Okay, we will not use this for any other purpose. Now why is this done? Why we have to do this? Okay, now we have done this to save the interest of other lenders. Okay, now there are many people who have invested money in the company, right? Now the law says that, okay, before making payment to the debentures, okay, you have to transfer some amount, 10%, to a separate account called as debenture redemption reserve account. Okay, just to protect the interest of other shareholders. Okay, now what will be the journal entry for this? Let's see. Okay, what will be the journal entry? What will be the journal entry? The journal entry will be, see, we are creating a reserve, right? We are creating a reserve. Our reserve means balance of profits. Okay, it will be a part of profits. Okay, so the balance of profits is increasing and the other profits is reducing. Okay, so what is reducing? Profit and loss account is reducing, so we'll debit P&L account, and from general reserve, right? We will transfer from profit and loss account and general reserve account. Okay, so these two accounts are reducing. Okay, and what we are creating debenture redemption reserve account. Simple. 1 lakh. Say for example 50,000 each, we are taking 50,000 each from both the account. Okay, so P&L account is reducing. We know that whenever a profit reduces, we will debit it, and whenever a reserve or profit increases, we will credit. Okay, so basically what we are doing, we are taking out money from this two account and we are keeping it in this account. Simple. Okay, now when these debentures are redeemed, okay, when the debentures are paid back to the debenture holders, the amount is paid back to the debenture holders, we will reverse the entry. Okay, we will finish this account now. Okay, same entry, we will reverse it. Okay, so it will be transferred to the profit and loss account and general reserve account. Okay, sorry, it will be transferred only to general reserve. I'm sorry, it will not be transferred to P&L account, it will be transferred to the general reserve account. Okay, to general reserve account. Okay, clear? So this is how you will do the treatment of debenture redemption reserve account. Okay, simple. I hope this is clear. If you want, you can copy it. Okay, you just pause the video, you copy it. How much to transfer? 10% of total nominal value of debentures to be redeemed. What will be the total nominal value? Face value into number of debentures. Okay, when to transfer? 31st March of 4th year. Okay, if debentures is to be redeemed after 5 years. This is the journal entry on creation. Okay, this is the journal entry on creation, and this is on reversal. Simple. Okay, now let's come to our last question of this unit. What's the question saying? S Limited decided to redeem how much? 8,000. Okay, 8,000 11% debentures of 100 face value each at a premium of 10%. The minimum amount transferred to DRR account will be, what will be the minimum amount? I have told you 10% of nominal value, right? So what is the nominal value? Number of debentures into face value. Okay, so 8 lakhs, 10% of 8 lakhs. Okay, so 80,000 will be transferred to the debenture redemption reserve account. Okay, redemption reserve account. Okay, so this is clear. Okay, and easy. Okay, now we are done with the questions of debenture capital and share capital. Okay, so I hope you have liked this video. Okay, very interesting. We have covered a lot of questions. Okay, so all these questions is more than sufficient for you to pass the exams. Okay, if questions come in this topic. Okay, see, we have done a lot of questions. Okay, now again, these questions, this is for you guys only. Okay, so if you want the PDF, this is my number. Okay, you DM me and you ask for the PDF. Okay, I will give this PDF, I will send it to you. You can take a printout and you can study from this PDF. Okay, so I don't think any questions apart from this will come. Okay, we have covered full-fledged questions. Okay, we have discussed all the topics, we have discussed all the concepts in detail, and we have done all the possible questions. Okay, so I wish you the best. You study hard. Okay, now students, those who are taking it lightly, please, if you want to get a good college, okay, if you want to settle here only, it's fine, you will get colleges, but for those students who wants to go out, competition will be really high. Okay, it will be tougher this time. Okay, I have heard that the exams will be a bit tougher this time, so wish you all the best. Okay, and you study hard. Now for students from Mizoram, again I will request you, I'm planning to give tuitions. Okay, so if you have any junior who wants to take tuition, who is confused on where to go and which teacher to select, you can, if you are liking the way I'm teaching, you can please suggest them, okay, to join my classes, and I'll be teaching them, okay, with full hearted. Okay, I personally believe in, you know, conceptual clarities. So the more conceptual clarity you have, the more questions you can solve easily. Okay, so I'll be giving tuition for 3 days a week. Okay, 3 days a week, and it will be around 2 to 2.5 hours a day, and the fees will be 2,500 per month. Okay, now students facing financial hardships, okay, you can ask for discount if you think that this is very much amount, okay, a big amount. you can personally text me and you can ask for some concessions. Okay, I will make sure that no one knows that you are paying lesser fee, and I will maintain that honor of I will not make you, I'll not let anyone know, okay, that you are paying lesser fee. I understand, okay, I have also faced this kind of problems, financial problems. So all the students are welcome. Okay, if you want to study well, if you want to get a good knowledge, you are welcome. Okay, I'm willing to teach in 500 per month also. Okay, but provided students should be serious. Okay, so I hope you enjoyed this lecture. So this is all for today. I will take up, I hope I've covered unit 1. okay, before this unit I will upload unit number 1, and unit number 1 also will be covered before you watch this video. And I guess I'll not be able to take up unit number 6 and 7, I guess 6 and 7, right? Let me just quickly see this unit. Okay, yeah, we are done this with this. I'll be uploading this. I have uploaded this. I have uploaded this. Okay, we are done with the solution. We are done with share capital. Okay, so these two questions, these two part, I don't think I'll be able to cover. Okay, because I have to travel, and I have very limited time, and I'll not be able to record all the lectures. This part basically you'll have to cover from the textbook. Okay, from the textbook you have to cover from your class 11th textbook. This is all theory. Okay, this is all theory. You can cover this up easily. Okay, and this 2 chapter. Okay, I will try to make questions for this. Okay, if possible. If you want the questions, if you want the PDF of the questions, you can ask me, and I will send you the questions as well as the answers. Okay, I will solve it, and I will send the questions and answers. If you want, okay, you can DM me and you can ask for it. Okay, so that's all for today. Okay, I'll take your leave now. I hope you have enjoyed the video, and if you have watched till this, thank you very much, and I'm looking forward to teach you guys again in future. Thank you. Bye bye. Take care.